When I first started trading, every time a trade went is what sets you apart from others. Because when you become the master of your results, you are no longer a slave to the market. But this is where most traders get stuck. Why? Because they blame the market for their losses, and this blame keeps them stuck in the same place. I did the same thing myself in my early days. Every time a trade failed, I'd think the market was wrong. Why did this news come? Why did this sudden reversal happen? This is manipulation. And thinking like this made me feel a little better. Because blaming provides comfort. I'm not wrong, the market is at fault. But this comfort is the biggest enemy of growth. When you blame, you're running away from responsibility. And when you run away from responsibility, you lose control. Then you become just a spectator, a helpless person standing with folded hands at every move of the market. There's a very subtle trap in trading. Victim mentality is so dangerous that it silently takes root within you. You say, "The market ruined my hard work." You think some external force is destroying your trading. But the truth is, the market is neither your friend nor your enemy. The market, it is simply neutral. The problem lies within, not outside. As long as you keep blaming yourself, you won't see opportunities to improve. You'll repeat the same mistakes again and again because you refuse to accept them as your own. I remember one time I took an impulsive trade. There was no setup. It was just a gut feeling, and the trade ended in a loss. I immediately said the market had cheated me. But the truth was, the market hadn't done anything. It was my fault. I had broken the rules, and only when I admitted this did I change. Blaming the market also weakens you emotionally. You trade with fear every time because you have come to believe that the market is unpredictable and unfair. But when you let go of the blame and take control, the fear subsides because you now know that every outcome is a result of your preparation and discipline. Blame the market. This brings about a powerful shift. You go from helpless to empowered. Now you know that no matter what the market does, you can learn, adapt, and grow every time. A victim mentality keeps you stuck in the past, but when you break out of it, your focus shifts to the future. Now you see every loss as a lesson, every mistake as a stepping stone. In trading, those who don't break out of the victim mentality repeat the same mistakes, but those who break free turn their losses into strength. And remember, the market is no one's enemy. It is neutral. If you consider yourself a victim, it's just your perception, and changing that perception can change your entire reality. So ask yourself this question: am I still considering myself a victim, or have I become the driver of my future? Because only when you stop being a victim do you truly become a trader. But even then, there's one truth that if you can't accept, all your hard work will be wasted, and that's accepting uncertainty as part of trading. This is the biggest reality of trading. No one can provide 100% certainty. Every market move is based on probabilities, but our minds seek certainty. We want every trade to be right, every setup to work, and our predictions to be a hit every time. I made the same mistake. Every time the market moved against my expectations, I would get upset. I would wonder why this happened. I had done the analysis correctly. This question consumed my mind, and this was where frustration, fear, and doubt arose. Then one day I asked myself, can I force the market to give me certainty? The answer was a clear no. And then I realized that trading isn't a game of certainty, but rather a game of managing uncertainty. When you accept uncertainty, a strange burden lifts from you. You stop judging every trade based on the outcome. You focus on the process. I told myself, every trade is just a probability. I might win, I might lose, but both scenarios are normal. And this thought changed my entire psychology. The market no longer frightened me because I accepted that losses are part of the game. See, the biggest problem traders face is that they want certainty in every trade. They want to be successful every time they learn a strategy. But that never happens. The market will always be random. Accepting uncertainty doesn't mean you become careless. It means you remain disciplined, focus on the process, and believe that the outcome is unpredictable. When you adopt this mindset, your fear disappears because fear always comes from the uncertainty of the future. When you accept that, fear no longer has any place. Successful traders are those who remain active in this chaos, who understand that every trade is not an outcome, but a reflection of execution. I created this rule. My job is to take trades, manage them, and follow the process. The outcome is the market's job. And believe me, as soon as I accepted this truth, my consistency began to improve, because now I could view every trade as a neutral event. No more excitement, no more fear. Accepting uncertainty is what protects you from emotional swings. Now, no matter what the market does, you remain anchored, and that's where the essence of trading lies. The market will remain unpredictable, but you can make your mind predictable. This brings us to the one thing that transforms trading from within: self-awareness. I learned in my journey that trading isn't just a game of charts or strategies. It's a game of that part of you that you rarely encounter, and that part is your own mind. Self-awareness means understanding yourself, observing your reactions, recognizing your thought patterns. Why do you panic when the market suddenly drops? Why do you become overconfident when the price moves in your favor? Why do you resort to revenge trading when you're losing? These questions seem simple, but this is where real awareness begins. I remember once losing 5 trades in a row during a losing streak. I was so frustrated that I thought I'd just make a big trade and recover. But at that very moment, I paused and asked myself, is this decision being driven by my strategy or my emotions? And the answer was clear. My emotions. That day I realized that until I learned to look within myself, the market would keep trapping me in the same loop again and again. Self-awareness holds a mirror to you. It tells you whether your decisions are logical or emotional. It tells you whether you're strategic or simply driven by impulse. And this awareness gives you an edge that other traders don't have. I started a simple habit to do this. I journaled after every trade, not just the numbers, but also my emotions. How was I feeling at the time of taking the trade? Did I exit out of fear? Did I increase my position size out of greed? Gradually, these notes became a map for me. I recognized patterns, how I would trade too quickly after a loss, how I would become careless after profits. And by breaking these patterns, I created discipline. Self-awareness in trading doesn't just make you a better trader, it also makes you a better human being, because when you learn to observe your emotions, you're no longer controlled by them. You learn to remain calm and patient. It's this awareness that lifts you out of the trap where other traders are stuck, between fear and greed. And remember, when you're aware, you view every trade with neutrality. Now, neither loss breaks you nor profit derails you. You remain balanced. Self-awareness is that invisible skill in trading that sets you apart from the rest. Because while others are busy understanding the market, you're trying to understand yourself. And when you understand yourself, the market becomes just a canvas for you, where you paint your own image. To win in trading, first understand yourself, because the market will remain the same. If you want to change, you must change yourself. And only when you understand yourself can you learn the most important skill of trading, discipline. But remember, discipline doesn't come automatically. It only arises when you embrace personal accountability. I learned this very late in my journey. Initially, I thought discipline was simply about following rules. But after repeatedly breaking rules, I realized that true discipline isn't enforced from outside. It comes from within. When you hold yourself accountable for your actions. In trading, there's no boss to tell you not to do this or not to do that. There's no supervisor to catch your mistakes. It's just you and your decisions, and that's what makes this game so difficult and dangerous. I remember one time I took an impulsive trade even though my plan clearly said to wait. That trade ended in a loss and I justified myself. This happened once. There won't be a next time. But then those next times kept recurring. That's when I made a rule for myself. I would write down every mistake and punish myself, and I would answer to myself. I wrote down not just the trades in my journal, but also the reasons. Why did I take this trade? Was it in my plan? And every time the answer was no, I had to confront myself. In the beginning, it was uncomfortable. It wasn't easy to blame myself. But gradually, this accountability brought about a change in me. Now, before taking a trade, I would think, if it went wrong, would I be able to justify it by writing it in my journal? And this very question would stop me. Accountability makes you disciplined because it shows you a mirror. When you look at every mistake with open eyes, you stop running away from them. Now, you don't make excuses, but find solutions. And this is the true foundation of discipline. Discipline in trading isn't a temporary thing, it's a daily habit. Observe yourself every day, check yourself, and answer to yourself. When you are accountable to yourself, you train your mind. You avoid impulsive trades, control over confidence, and recognize and neutralize fear. This impacts not just your trading results, but your entire mindset. You no longer make random decisions. You become process-driven. And frankly, this is where the journey from a trader to a professional trader begins. Personal accountability brings you to a place where you become your own teacher. You guide yourself, correct yourself, and gradually transform yourself. And when this transformation happens, trading is no longer just a means of earning money. It becomes a reflection of your inner strength and stability. Remember, discipline cannot be imposed from outside. It only comes when you hold yourself accountable for your actions. And when this mindset is established, trading becomes a controlled, structured, and powerful journey for you. Because ultimately, the market cannot be controlled. But you always have control over yourself, and this control is your true power. When I look back on this entire journey, one thing resonates clearly in my mind. True victory in trading comes not from charts or strategies, but from completely owning yourself. Most traders blame the market, the news, or curse luck. But the truth is that as long as you focus on external factors, you will remain powerless. Trading changes when you say, yes, it was my mistake. It was my decision and I can correct it. That's when you transform from a victim to a creator. Taking responsibility doesn't mean punishing yourself. It means empowering yourself. When you own your results, you understand that every mistake, every loss, every wrong decision is a lesson, and these lessons become your strengths. I learned that 3 things make a real difference in trading. First, stop blaming the market. Second, abandon external control and adopt internal control. Third, hold yourself accountable. When you have this mindset, you become perfect amidst all the chaos of trading. You know that uncertainty is part of the game and you accept it. You observe yourself, manage your emotions, and make discipline a habit. This is where the trader who endures is born. The market will be unpredictable. Losses will come. But when you own your mind, you remain anchored through any storm. The real power in trading lies not in profits, but in the control you exercise over yourself. When you master this control, you are no longer just a trader. You become a disciplined performer. So ask yourself this question: am I still blaming myself, or am I ready to take control of my life? Because once you take responsibility for your actions and results, no matter what the market does, you create your own path. And that is the path to ultimate freedom in trading. Thank you. I have formatted your text below, ensuring that 100% of the content and wording remains exactly as you provided, while adding spacing to make the insights more readable and impactful. Friends, when we enter the world of trading, the first dream that comes to our mind is consistency. We think, if I make a profit every time, if every trade is successful, I'll be financially free. And frankly, this thought is what draws us to trading. But have you ever asked yourself, is consistency really what we think it is? I believed that in the beginning too. I thought I'd find a strategy that would work every time, a setup that would win every time. And when I made a few profitable trades, I felt like, yes, this is the way. Now I'm unstoppable. But the reality of trading was something else. I saw a strategy that worked perfectly. The previous week failed the next week. Same indicators, same patterns, yet different results. And this happened again and again. Initially, I was frustrated. I wondered if the market was against me. But the real answer lay elsewhere. Consistency in trading isn't what we think. It doesn't come from a magic formula or a never-fail strategy. The market is always changing. Price action is dynamic. No single setup will always work. So how is consistency possible? This is where I realized something important. Consistency isn't external, it's internal. Traders often associate consistency with outcome. If I win 10 times in a row, I'm consistent. But the truth is, consistency in trading doesn't mean winning every time. It means following the right process every time, regardless of the outcome. The market operates on probabilities, not certainties. And when you understand this, you start judging every trade not by outcome, but by execution. This is true consistency. In my early days, I considered every loss a failure. Every time a trade went into a loss, I thought my strategy was bad. I was wrong and I would change my strategy. But later, I realized it wasn't the strategy that was failing. It was my mindset that was failing. I was looking for consistency in the wrong place. Consistency comes when you consider loss as part of the process. When you understand that every trade is a probability, not a certainty. When you shift your focus from the result to the execution. And herein lies the biggest challenge. training your mind. Because our mind craves certainty, it wants the outcome to be positive every time, and when it doesn't, it panics and doubts. But trading is a game where you have to let go of certainty. You have to accept that some trades will win, some will lose, and this acceptance makes you a committed, focused, and disciplined trader. I made a rule for myself. I won't make a profit on every trade, but I will follow the process on every trade. And that was the moment that changed my entire approach. Consistency isn't something external, it's a on the charts, but in their minds. So if you truly want to be consistent, the first step is to accept losses as normal. Observe your emotions and prioritize process over outcome. Because unless you do this, you'll repeatedly return to where you started. And this is where the most crucial concept of trading comes in. Thinking in terms of probabilities. When I first started trading, I viewed every trade with a sense of certainty. I believed that if I analyzed correctly, the price would move in my direction. And when that didn't happen, frustration would crush me. But gradually I realized that there's no such thing as certainty in the market. The market is a living system, changing every moment, driven by the psychology and decisions of millions of traders. Therefore, it's wrong to think that any given setup, any given pattern will work every time. Winners in trading are those who view every trade as a probability. They understand that no trade is 100% certain, and therefore, they don't get emotionally attached to the outcome. I remember when this concept dawned on me, my entire approach changed. Previously, I would strive to win every trade. Now, I began to execute each trade through a process because I understood that one trade doesn't define my future. Thinking in probabilities means you treat each trade as an independent event, as if you were tossing a coin, sometimes heads, sometimes tails. If you maintain the right risk and reward balance, the long-term results will be in your favor. But most traders don't understand this. They attach every trade to their ego. If they win, their ego inflates. If they lose, self-doubt begins. This roller coaster pulls them away from consistency. When you think in probabilities, losses don't disturb you. You know that losses are as normal as profits. You know that each trade outcome is just a number that, when mixed into the long-term equation, creates an overall edge. I made a simple analogy. Trading is like a casino. Casinos know that their edge in every game is small but consistent. They don't try to win every time. They simply execute each game and play to their advantage over the long term. This is the mindset a trader should adopt. Thinking in probabilities has another benefit. You avoid overtrading because you now evaluate each setup. Is this a high probability trade according to my rules? If so, execute. If not, skip. This is where discipline comes into play. Those who survive in the market are those who view every trade as a probability, not a certainty. They know that their job isn't to predict the outcome every time. Their job is to play their edge over and over again, no matter what happens in the short term. This mindset has given me an emotional freedom I never had before. Now, I'm neither afraid of losses nor overconfident of wins. I've simply become a process-driven trader. Because this is the real secret to winning in trading. Stop thinking in certainties. Start thinking in probabilities. This mindset gives you clarity in chaos and makes you a true professional. But despite thinking in probabilities, there's one more thing that shapes your consistency: your belief systems. Your mind is the filter through which you view the market. Every price move, every chart pattern, every news item is interpreted by your beliefs. And if your beliefs are wrong or incomplete, your perception will also be distorted. I've experienced this myself. Sometimes the market is neutral, but my old beliefs would interpret it in my favor or against me. For example, if I believe that every breakout is strong, I will blindly buy every breakout, even if the market is setting a trap. Similarly, if I believe that loss means failure, I will treat every loss as a personal insult. These beliefs influence our decisions so deeply that we don't even realize it. Why does consistency break? Because when your beliefs and market reality clash, your mind becomes confused. You ignore signals, become driven by emotions, and deviate from the plan. You get lost. Consistency in trading doesn't just mean following a strategy. It means developing beliefs that align with the nature of the market. What is the market? A dynamic environment where there is no certainty, only probabilities. If you believe that certainty exists, you will always be frustrated. If you believe that losses are avoidable, you will become afraid to take risks. I remember a time when I faced a losing streak. Each loss reinforced my belief that perhaps I wasn't cut out for this job. But then I asked myself, was this belief true or just a reflection of my emotions? Then I realized that beliefs aren't permanent. You can change them. I started retraining my mind. After every loss, I reminded myself that loss is a part of trading. It's not a failure. I developed the belief of viewing every trade as a probability. Gradually, my decisions became neutral and disciplined. Beliefs are the foundation for consistency. If this foundation is weak, no matter how many strategies you use, you'll repeat the same emotional mistakes again and again. But when you adopt beliefs that reflect the market's truth, only then do you become stable. And this is the point where you begin to execute every trade without fear or greed. The true mastery of trading comes when your beliefs and market reality are synchronized. Then, neither the market surprises you nor your emotions derail you. Then, you enter a flow state where consistency flows naturally from within you. Remember, your market is what your beliefs show you. If you change your beliefs, your market will change too. When beliefs align, consistency will no longer be a struggle. It will become your natural state. But maintaining this natural consistency requires one more thing: emotional neutrality and discipline. Let me tell you the truth. The biggest battle in trading isn't on the charts. It's within us. Every tick in the market, every price movement triggers our emotions. Fear, greed, excitement, frustration. All of them constantly arise within us. And if you don't control these emotions, they control you. I remember once seeing a profit on a trade. Everything on the charts was in my favor. I was so excited that I doubled my position, and within minutes the market reversed. That excitement turned into panic. That day, I learned that emotion-driven decisions always lead you in the wrong direction. Emotional neutrality means observing every market move without any personal attachment. Whether the price goes up or down, you remain calm. Whether there's a profit or a loss, your mind remains stable. This stability is the foundation of discipline. But developing neutrality isn't easy. Our brains are naturally reactive. When profits are visible, greed is triggered. Hold a little longer and you'll get more. And when losses occur, fear tells you to exit or you'll lose everything. Discipline means following your rules even when you hear these voices. I created simple rules for myself. Once you set a stop loss, don't move it. Exit when you hit a profit target, no matter how the market moves. Don't overtrade, no matter how tempting. And each time I followed these rules, I felt a little stronger. Gradually, my brain stopped reacting to every small move in the market. Emotional neutrality isn't about suppressing emotions. It's about the awareness of understanding that your emotions are coming, but you don't allow them to act. When you're in this state, the market becomes just data for you. You view it objectively. Now, price movements are just information, not personal attacks or ego boosters. And when you're neutral, you're disciplined. Discipline doesn't come by force. It comes from inner peace. Winning traders in trading are those who remain focused no matter what. For them, a loss or a win doesn't define their identity. They simply repeat their process over and over again. I learned that emotional neutrality and discipline aren't just for trading. It transforms your entire personality. You become patient. You stop making impulsive decisions and you learn to trust yourself. When you reach this level, trading is no longer a source of stress. It becomes a smooth process where you execute each trade, accept the outcome, and prepare for the next. This is where you truly trade in the zone, in a flow state where there is neither fear nor greed, only clarity and control. And remember, when the mind is neutral and discipline is strong, consistency comes naturally. This is the formula that transforms an average trader into a master trader. But this raises another big question. How is a winning trader's mindset developed? I'll tell you the truth. A winning mindset isn't born. It's created, and to create it, you have to dig deep within yourself. Initially, I too considered the market merely a money-making machine. But when losses hit me repeatedly, when I broke even once, I realized that trading isn't just a game of strategy. It's a game of your beliefs, your emotions, your patience, and your focus. And until all of these align, winning is just an illusion. A winning mindset doesn't mean you'll win every trade. It means you'll execute every trade with confidence and clarity, no matter the outcome. I've seen most traders become slaves to outcomes. They're happy when they see a profit and devastated when they see a loss. But traders with a winning mindset are different. Their focus is on just one thing: the process. When you develop a winning mindset, you treat every trade as a neutral event. No loss disturbs you emotionally, and no profit makes you overconfident. You remain in a steady state. 3 things are crucial to developing this mindset. The first is self-awareness. You need to know yourself. What are your emotional triggers? What kinds of market movements make you panic? What situations make you impulsive? When you recognize this, you can break these patterns. Second, acceptance. The market is uncertain. Every trade is a probability. When you accept this truth, you stop fighting the market. You see it as it is. This acceptance makes your mind work and makes you logical. Third, discipline. A winning mindset is incomplete without discipline. Discipline is the bridge that transforms your knowledge into action. Following rules can be boring, but these boring actions yield extraordinary results. I remember when I adopted these 3 pillars, my entire trading changed. Before, I would be on an emotional ride with every trade. Now I am a calm observer who simply executes my plan. Developing a winning mindset means you improve yourself a little bit every day. You don't run from your losses, but analyze them. You turn every win into a seed of confidence, not ego fuel. And most importantly, you stop trying to control the market, because you know the market is uncontrollable. Now you only control yourself. When this mindset is developed, trading is no longer a struggle. It becomes a smooth journey where you make every decision with clarity, accept every loss, and celebrate every win with balance. This mindset brings you to a place where you are truly in the zone, where trading feels effortless and you operate in a natural flow. Believe me, this mindset is the true secret of every winning trader. But to maintain this winning mindset, you must understand one final truth. Consistency doesn't come from the outcome, it comes only from the process. Our minds always crave results. If we see a profit, we consider ourselves successful. If we suffer a loss, doubts immediately set in. But this thinking is the biggest trap in trading because the outcome is not in your control. The market will always be dynamic and every trade will be unpredictable. I made this same mistake in the beginning. I would measure my confidence by looking at the results every time. When I won, I felt I understood the market. When I lost, I thought maybe I wasn't cut out for this job. These ups and downs in emotions kept destabilizing me again and again. Then I asked myself, if the outcome is not in my control, what should I focus on? And that's where I found the answer. Process. Process means the steps you follow repeatedly without skipping. Clear entry rules, define stop losses, plan position sizing, and predetermined exit points. All of this is in your hands. Whatever the outcome, if you followed the process, you made the right trade. When this realization dawned on me, my entire trading psychology changed. Now I judge every trade with just one question. Did I follow my process correctly? If so, the outcome doesn't matter. Even a high probability setup can sometimes fail. This doesn't mean your strategy is bad, and an impulsive trade can sometimes yield profits. But it doesn't mean it was the right one. In trading, the measure of right and wrong can't be solely outcome. Consistency truly means repeating the same discipline process every time. When you repeatedly follow the same rules, the probabilities begin to shift in your favor. This isn't magic, it's math. I developed a simple habit for myself. I would review my trades every day after the market closed. If the process was correct, I would give myself credit, even if it resulted in a loss. If the process was wrong, I would make a note to improve myself. This habit became the biggest reason for my growth. A process-driven approach gives you emotional freedom. You no longer consider losses as failures or profits as ego boosters. You simply know you did your job right. The rest is the market's business. This is the mindset that keeps you from overtrading. It's the mindset that prevents you from making impulsive decisions. And gradually, as you repeat this discipline process every day, consistency builds automatically. You no longer need to constantly change strategies. You remain calm even in market chaos because your focus is only on what is within your control. Remember, the ultimate story of trading lies in the outcome. No. Success comes when you learn to love the process, when you faithfully follow each step regardless of the outcome. And when you reach this state, trading feels effortless. You don't try to manipulate the market itself presents you with opportunities according to your rules. This is where consistency becomes a natural state, and it's the state that leads you to trading in the zone. Friends, when I look back on this entire journey, one thing is absolutely clear. Consistency isn't something external. It doesn't come from a strategy, an indicator, or a magic formula. It's purely a state of mind. We all start out thinking that if we find a perfect system, we can win every time. But the truth is, there's no certainty in trading. The market will always be dynamic. A strategy may work today but fail tomorrow, and this is the harsh reality that shakes every trader to the core. But it's only after accepting this reality that true growth begins. Consistency comes when you learn to trust the process, to let go of your obsession with the outcome. When you execute every trade as a probability, when you accept losses as normal events, not as personal failures. I learned that emotion, neutrality, and discipline are the tools that keep you going amidst chaos. And this is possible only when your beliefs align with market reality. Winning traders aren't magicians. They don't always predict the market. Their edge lies simply in doing the same right thing over and over again without any emotional disturbance. And it's a normal, calm, and professional process, and that's where real victory begins. But a truly consistent trader knows that every trade is just a possibility. There's no guarantee. And friends, this is where the second rule of trading, belief in probabilities, comes into play. When you learn to trust probabilities, look, in the market, winning doesn't mean being right every time. It's just a game. Your job is to bet on the right opportunity and let it take its course. When I first understood this, I realized that I had been trying to control the market all along. I viewed every chart pattern based on my expectations. But the market never followed my expectations. Trusting probabilities means you accept that no single trade represents your entire trading career. It's just one event, and hundreds of similar events together determine your outcome. Let me give you an example. Suppose you have a strategy that works 60% of the time. This means that out of 100 trades, you will win 60 times and lose 40 times. But if you abandon your strategy out of fear after every loss, you'll never achieve those 60 wins. When you accept probabilities, each loss becomes just a step toward the destination where long-term victory awaits you. Your mind then begins to function on a different level. It no longer views each trade as a matter of life and death, but as part of a long-term game. I also realize that trusting probabilities is only possible when you fully understand your edge. Because if you're not confident that your strategy works, a couple of losses will shake you. But when you're confident, you remain calm, even when the market goes against you. Friends, the most dangerous thing in the market isn't losing. The most dangerous thing is forgetting how to win just because things didn't go your way a few times. Believing in probabilities saves you from this trap and gradually transforms you into a trader who focuses on the process rather than the outcome. And this is the beginning of true freedom. But the biggest door to this freedom is to fully accept risk. And friends, this is the third rule, the ultimate risk acceptance. Let me tell you the truth. Until you accept the risk of every trade wholeheartedly, you can never be completely free in the market. And accepting risk isn't just a matter of knowing a number. It's a state of mind. It's an emotional agreement you make with yourself. Yes, even if this trade goes wrong, I'll be okay. In my early days, I would simply write down the risk on paper every time. Okay, this trade has a 2% risk. But the truth was, I wasn't prepared internally. As soon as a trade went against me, panic would set in. My mind would ask questions like, should I exit now? Should I wait longer? Maybe it would come back up. And entangled in these questions, I was neither able to exit at the right time, nor hold on at the right time. Then one day I realized that writing down the risk and accepting the risk are two different things. Accepting the risk means you accept the loss as part of your story. You tell your mind in advance that if this money is lost, it's just an expense to my business, not proof of my mistake. When you reach this level, a magical thing happens. Your trading decisions become completely clear. Now, instead of fear, you only see the plan. If your plan says to exit here, you do it, without turning the loss into a personal emotion. And yes, accepting risk also means you don't lie to yourself. If your portfolio or your mental capacity can't handle a 5% loss, you don't try to prove to yourself that you can. You only take on the risk you can truly handle. Friends, this is the secret to lasting in the market, having the courage to take small losses so you can wait for a bigger opportunity. A risk-averse trader never quits because they know that one loss is the beginning of the next opportunity. When you adopt this mindset, you truly enter a world of trading where there's no fear, no pressure, just a clear vision and a calm mind. But friends, another big test awaits you. Act without hesitation. Fourth rule, act without hesitation. I'll tell you a truth. The market waits for no one. Opportunities arise here and change in the blink of an eye. And if you hesitate, you've lost half the battle. In my early days, I missed many good opportunities simply because I kept asking myself, is this the right entry? Is this really a breakout? What if it was fake? And by the time I realized it, the market had already moved on. The trade, which fit perfectly with the plan, was missed because of my hesitation. The problem wasn't that I didn't understand the setup. The problem was that I wasn't prepared to trust it and act immediately when I saw my edge. In the market, even a second of fear can become a wall between you and profits. Acting without hesitation doesn't mean jumping on every move. It means being so clear and prepared that when your plan says it's time, you don't waste time thinking. Your decision has already been made. All that's left is to execute it. And this confidence comes when you have complete confidence in your edge and risk management. When you know that even if this trade goes wrong, it's just part of the game, then your mind doesn't ask questions like, what if? I learned this in my career. A trader's greatest strength is their clarity and execution speed. Everyone can learn to read charts in the market, but not everyone can pull the trigger at the right time, and only those who can do so become true professionals. Remember, friends, hesitation impacts not only your plan, but also your future. So if you've determined your risk, your plan is clear, and your setup is in place, then act fearlessly, without hesitation, because the most expensive thing in trading is a lost opportunity. But even when you seize that opportunity, another test arises: keeping the profits. And that's the fifth rule: pay yourself as the market, make money available. I made this mistake countless times in my early days. I made the right trade. The market moved in my direction, but I kept thinking, if I wait a little longer, the profits will increase. And then the market turned around and ate up all my profits. That trade, which could have been a handsome win, turned into a mediocre one, or sometimes a loss. Friends, the market gives you opportunities to make money, but it doesn't give them forever. Its job is to move up and down, and yours is to withdraw your share at the right time. This is what it means: paying yourself as the market makes money available. It sounds simple, but in reality, greed and fear can deceive you here too. Greed says, hold on a little longer and your profits will be bigger. And fear says, take it out now lest it come back. A professional trader strikes a balance between these two. They neither unnecessarily pull profits nor run away prematurely. For this, you need a clear plan: when to take partial profits, when to close a full position, and when to take these decisions should be based on your predetermined rules, not on the market's movements. Because if you make decisions based on emotions at that time, you will make a mistake 8 out of 10 times. I remember one trade where I was 5% profitable, but I thought a little, and in the next hour, the market wiped out my 5% profit, leaving me with a 2% loss. It pushed me into losses. That day I decided that from now on, whenever the market offers me payment, I will take it and be grateful. Friends, there's only one way to survive in the market. Consistently take small profits and make them part of your capital. Big profits will come. But if you give up small profits, the wait for big profits will never end. Remember, earnings in the market are yours only when they have arrived in your account. The green number on the screen is just a possibility, not a reality. So, when the market is offering you money, don't hesitate to take it. This is the mindset of a true trader. But friends, after you earn money, the real responsibility doesn't end. It increases. Because the most dangerous thing in the market is a small mistake that can slowly eat up your entire account. Monitor your susceptibility to making errors. And that is the 6th rule. Let me tell you the truth. Mistakes aren't just made by new traders. Professionals do too. The only difference is that professionals recognize their mistakes quickly and avoid repeating them. This is what monitoring your susceptibility to errors means. This means keeping an eye on your mental and emotional state that could lead you to make a mistake. Mistakes in trading don't happen suddenly. They have a pattern. For example, becoming overconfident after a short period of consecutive wins, or resorting to revenge trading after a series of losses. Once, I made consecutive winning trades and thought I understood the market completely. What happened next? In the next 4 trades, I lost so much that all my previous profits were wiped out. The root of mistakes always lies in our state of mind. If you're angry, tired, or have other worries on your mind other than the market, there's a 90% chance you'll deviate from your plan. This is why a true trader doesn't just look at charts. They also look at themselves. Before, during, and after every trade, I made a rule for myself. If I'm not emotionally balanced, I won't trade, no matter how good the opportunity is. Because I realized that a bad decision doesn't just result in a loss of money, it also damages your self-confidence. Friends, you need to develop the habit of reading your inner signals at all times. For example, are you entering outside of your plan? Are you repeatedly checking the screen even though you've already decided on an exit? Are you arbitrarily adjusting your trade to avoid losses? If the answer is yes, you need to stop immediately and control yourself. Remember, the real game of winning in the market comes from within. If you catch yourself in time, you've won half the battle, and a trader who understands this will stay in the market for a long time, no matter how the circumstances change. Friends, here comes the last and most important point. Never violate your principles. Never violate the principles. This is the 7th rule. In my entire trading career, I've seen the biggest losses come not from a bad strategy, but from a good trader breaking his own rules. When you work hard for months, sometimes years, and develop principles for yourself, how much risk to take, where to enter, where to exit, and under what circumstances to avoid trading. These aren't just things written on paper. They become part of your trading DNA. But the moment you compromise those rules, even if just once, you give the market an open door against you. And the market always comes in through that door. I still remember the one time I broke my risk limit. I thought this trade was a sure thing. This time I'd put in a little more. As a result, the trade backfired and my losses were so severe that not only my money, but my confidence was shaken. That day I vowed that no matter how tempting the situation, I wouldn't break my principles. Friends, following principles seems easy when the market is moving your way. But the real test comes when things go against you. When you feel that this time, by breaking the rules, you can avoid losses or make more profits. This is the moment where 99% of traders fall, while 92% of professionals persevere. Always remember, rules are not meant to take away your freedom, but to protect your freedom. If you stand firmly by your principles, no storm in the market can topple you. Therefore, no matter how the circumstances change, no matter how great the temptation, or how deep the fear, never break your principles. Once you've broken this wall, it becomes exponentially more difficult to rebuild it. The trader who maintains this wall remains a long-term winner in the market. Friends, this entire trading journey we've just traveled together isn't just about charts, patterns, and indicators. It's actually a battle between you and your mind. Winning here doesn't just mean making money, but rather about gaining such control over yourself that no fear, greed, or panic can shake your decisions. Imagine if you recognized your edge, assumed the risk of every trade in advance, trusted the probabilities, acted without hesitation, took your share of profits at the right time, constantly monitored your mistakes, and never broke your principles. Then, can any force drive you out of the market? The answer is no. The market is a mirror. It shows you every day who you are, how strong your thinking is, and how well you control your emotions. If you conquer yourself, the market becomes just a game for you, and you will always play by your own rules. Remember, the secret to successful trading lies not in any secret formula, but in disciplined, calm, and clear thinking. It is the art of valuing your mind more than money, and when your mind is under your control, money automatically comes under your control. So the question now isn't what the market will give you. The question is, what will you give the market? Discipline or carelessness, confidence or fear? If the answer is the former, then believe me, success awaits you. Friends, you might be wondering, risk. Hearing this word for some reason brings a sense of dread. It's as if it's a dangerous trap that will take everything away. But today I want to share a truth with you. Risk isn't as scary as we've been taught. When I started trading, I had the same fear. My heart pounded before every decision. My hands trembled. One question echoed in my mind. What if I lose everything? This question is the same question that haunts every new trader. We tend to view risk as something against us, an enemy, an obstacle. But what if I were to say that risk is actually our truest friend? Yes, risk teaches us to take responsibility. It tells us what our limits are, how much courage do we have, and most importantly, how clear our thinking is. Risk doesn't scare us, it awakens us. It forces us to reflect on where we stand and where we want to go. In the world of trading, as long as you continue to consider risk as your enemy, you won't understand its power. But the day you make it, your friend will be the beginning of your true growth. I've also learned that when you respect risk, it teaches you the art of staying in control. It tells you how dangerous it is to give in to greed and how important it is to remain restrained. So the next time you hear the word risk, don't be afraid. Smile, because it's the word that sets you apart from others. It's the word that tells you you're serious, you're professional, and most importantly, you're prepared. Risk isn't a four-letter word, but a door to 4,000 possibilities. How you view it determines whether you'll fail or thrive. And this is the word that shows you're serious, you're professional, and most importantly, you're prepared. But now the question arises, are we really professionals? Look, people often treat trading as a hobby, as a way to kill some boredom one evening, or as a way to make a quick buck. But the truth is, trading isn't a game. It's a full-fledged profession, and like every other profession, it requires respect, dedication, and a system. When a doctor, an engineer, or a lawyer begins their career, they enter that profession only after years of study, training, and hard work. But a trader downloads an app on their mobile phone, watches a little YouTube, and the next day considers themselves a master of the market. This is the biggest mistake. If you don't approach trading professionally, the market will not forgive you at all. This place only tolerates those who treat it like a business. Those who have a plan, discipline, and take responsibility for every decision. Early in my career, when I considered trading part-time, it led to full-time losses. But as soon as I saw it as a business, with capital, strategy, risk management, and performance tracking, my true growth began. Making money in trading isn't difficult. What's difficult is maintaining it. And that's only possible if you consider yourself a professional, not a gambler who comes every day to try his luck. So, if you want to stay in this field, first change your mindset. Think of your trading desk as an office, your charts as reports, and yourself as the CEO of a company whose decisions determine the direction of profit or loss every day. Trading is a business, and you are the responsible owner of that business. But no business can run on just an idea or passion. It requires capital. Money that, even if lost, doesn't bring your life to a standstill. And this is where the biggest deception lies: the failure to understand risk capital. be so strong that the net result is positive. But if you don't know your odds, then when you'll lose and when you'll win, everything will be based on guesswork. In trading, an edge is that invisible shield that protects you from market chaos. And that edge is only created when you become friends with data. When you view every trade as an experiment and learn from each outcome. Only then will your decisions become logical, not emotional. Remember, trading is a game of probabilities, not certainties, and only those who understand it survive. But understanding alone isn't enough. Friends, survival is also essential to survival. And this is the biggest truth of the trading world. The winners here aren't those who earn the most, but those who earn the least. Your biggest enemy is neither the market nor anyone else's strategy, but the risk of ruin. That is, a loss that can wipe out your entire capital and eliminate you from the game. Sadly, most traders don't even think about it. I too made this mistake many times in my journey. Overconfidently taking large positions, staking all your capital without thinking, and then, when the market reverses, being filled with panic, guilt, and regret. And the most painful moments are those when you realize there's nothing left to do. The risk of ruin begins when you treat your account like a casino chip, not an asset, and the only way to avoid it is position sizing. Position sizing is the invisible formula that keeps you from being swept away by the market's waves. It determines how much risk you should take on a single trade, no more, no less. This calculation is based on your account size, risk tolerance, and age. There's no gut feeling or sixth sense. I remember when I first seriously embraced this concept, my confidence increased exponentially because I was no longer emotionally attached to the outcome of each trade. I simply followed my process. Every loss became an acceptable cost, and every win a bonus. Position sizing means a smart survival strategy. It's the discipline that keeps you in the market for the long haul, especially on days when nothing seems to be going your way. Trading is a marathon, not a sprint, and those who understand this know that the greatest weapon is neither knowledge nor strategy, but rather capital conservation. Because as long as you're in the game, hope is still alive. But now the question arises, if survival is so important, then what threatens us most? No, not the market, certainly not loss. We are most vulnerable to ourselves, our own emotions. The most dangerous thing in trading isn't an external factor, it's internal. The fear, the greed, the anxiety that forces us to break the rules. And this game of psychology is so subtle that we don't even realize when we transform from a disciplined trader to an impulsive gambler. I've experienced this myself. When a trade consistently loses, my heart says, just try one more time. This time it will work out. But my mind knows, no, this is going against the plan. And then, standing at that crossroads, we make the mistake that devastates our entire account. Trading psychology isn't just a subject for books. It's a daily struggle. Controlling your mind, not making panic decisions, and sticking to your rules is the real battle. And this battle begins again with every trade, every candle. I remember one day when I saw big, I took a position. Everything seemed technically correct. But as soon as the market moved in the opposite direction, my hands started shaking. I started looking at the charts again and again. I kept wondering what to do next. At that time, I wasn't trading. My emotions were driving me. And that day I realized something. If you don't have self-control, the market is of no use to you. So if you truly want to become a successful trader, you must first conquer your mind. Recognize your emotions. Don't suppress them. Understand them. If you feel fear, stop. If greed arises, think. Is this part of my system, or is my mind misleading me? Trading is a mirror. It shows you your true self. And only if you have the courage to see that truth can you move forward. Because in the end, it's not difficult to beat the market. Defeating yourself is the first step, and after defeating yourself, the next step is to give yourself direction. Because even if you control your mind but the path isn't clear, how will you reach your destination? This is where a solid plan is needed. I'm not just talking about a trading plan, I'm talking about a business plan that defines everything. Your capital, goals, risks, structure, strategies, and mindset. I've seen many passionate people in trading who learn indicators and recognize patterns. But when asked what their trading plan is, their eyes become blank. Why? Because they think that success lies in simply buying and selling quickly in the market. But the truth is that trading without a plan is like sailing a ship in a storm without a map. No matter how hard you work, you won't reach shore. When I created a business plan for myself, for the first time, I gained clarity about what I wanted and which path to take. I decided how much return I wanted each month, how much loss I could tolerate, which strategies were my strengths, and when I shouldn't trade. A proper trading plan is the foundation that gives direction to every decision you make. It includes entry and exit rules, fixed trade risk, and most importantly, a review system that provides feedback after every trade. Let me tell you one thing. Not every great trader is a brilliant trader, but every sustainable trader is definitely a great planner. Because consistency doesn't come by magic. It comes from planning. Discipline is born when you follow your system every day, without shortcuts and without emotional bias. That's why if you want trading to become your profession, look at it the way an entrepreneur looks at their startup. Would you invest in a business without a plan? No, right? Then why risk your most valuable assets, your mind and capital, without a plan? Your trading plan is your blueprint, and no building is built without a blueprint. No success lasts. But once the plan is in place, the next question arises. Will this plan work? Or does it just look good on paper? And the only thing that can answer this question is backtesting. The biggest mistake in trading is that we create a strategy, trust it, and then execute it with real capital without testing it. And when that strategy fails, we blame the market or our luck. But the truth is, how will a strategy you haven't properly tested work in real life? Backtesting is the step that brings your strategy to reality. I still remember the first time I did backtesting. I spent hours staring at charts, simulating trades with old data. Initially, it seemed boring. But as I started looking at the data, patterns began to emerge. And most importantly, my strategy's win rate, drawdowns, and reward to risk ratio began to emerge. This is where I realized that the strength of a strategy is measured not by feelings and assumptions, but by numbers and performance. Backtesting tells us how a strategy has performed in the past. And while past performance isn't a guarantee of the future, it certainly provides a solid foundation that helps us determine whether our thinking is sound or simply a hoax. But backtesting alone isn't enough. Performance metrics are also essential. Measures that reveal the true picture of your trading. Win rate, average, profit, loss, expectancy, Sharpe ratio, maximum, and drawdown are all key components of your trading journey. We often think we're performing well, but when we see actual metrics, our eyes turn down, and that's where real growth begins, when you confront your own truth. Trading isn't just about looking at charts. It's about understanding data and using it to make better decisions. And when you incorporate backtesting and performance metrics into your process, you begin to transform from a mere entrant into a professional. Because the real power lies neither in the strategy nor in the indicators. The real power lies in the clarity of the data. But despite that clarity, sometimes there are times when everything seems blurry. When your best strategy fails and every trade feels like an emotional blow. Yes, I'm talking about the harsh reality we call drawdown. Drawdown isn't just a drop in numbers, it's a shattering of expectations, it's a rise in self-doubt. A period when you start questioning yourself. Am I worth it? Does my strategy really work, or was I just lucky? I've been saved all this time. I've seen this face too. When 5, 7, even 10 trades in a row went wrong. Opening the charts every morning felt like torture. I used a back-tested system, yet everything was going wrong. And that's when I learned one thing. Drawdowns are the test of any professional trader. This is the time when it's not the market, but your mental strength that is being tested. And the question isn't whether you're losing or not. The question is whether you'll be able to recover. Recovery starts with self-awareness. First, you have to accept that drawdowns are inevitable. No strategy, no matter how tested, will always work. And when it doesn't work, don't panic. Pause. I made my biggest recoveries when I tried to understand loss instead of running away from it. when I quit emotional revenge trading and returned to my process. The way out of drawdowns starts with discipline, not fear. Reduce position size, reduce frequency, and simply observe for a while. Re-understand the market. Reset your psychology. Because remember, a drawdown doesn't define you, but your recovery certainly does. Success in trading doesn't mean you'll never fall. Rather, it's about how you get back up when you do. Drawdowns aren't meant to break you, but to refine you. But does everything become easier after you've recovered? Absolutely not. Because the real challenge begins when you make a comeback, when your trade starts succeeding again, when confidence returns, and so does your ego. That's why the most important thing every trader must maintain every day with every trade is a risk management mindset. I want to share a truth with you today. The biggest losses, the biggest defeats, don't happen when we know nothing. They happen when we assume we know everything. When I started making some consistent money trading, I felt like I had it all figured out. I started breaking risk limits, increasing position sizes, and ignoring self-made rules. And then one day, a single trade wiped out weeks of my profits. That very day, I realized that risk management isn't a tool, it's a mindset. And as long as this mindset is alive within you, you can bounce back from any adversity. This mindset means always being defensive, no matter how confident you are. This mindset reminds you that the market doesn't belong to anyone. It can teach anyone everything at any time, painfully. A risk management mindset teaches you discipline. He says to treat every trade every day as if it were your first, and maybe even your last. This doesn't mean you should trade fearfully, but rather with clarity. Saving capital should be your first priority. Profits will come, but if there's no capital left, there's no question of profit. After every winning streak, this mindset gives you the strength to stay grounded. During every losing streak, this mindset gives you the courage to pause, reflect, and get back up. Becoming an expert in trading doesn't mean mastering strategies, but rather establishing a system in your mind. A system that keeps you stable in every situation, because ultimately, trading isn't an art, it's just a mind game. And to win this game, you have to learn to think, not manage risk. But where does this habit of thinking, this clarity, this self-awareness come from? Amidst the chaos of everyday life, where do we find the opportunity to recognize ourselves after every loss and win? That's where a professional trader's most powerful tool, the risk journal, is born. Yes, you heard that right. A diary, a locked book, a mirror where you can see yourself after every trade, without filters, without excuses, exactly as you are. When I first started maintaining a risk journal, I thought it was a boring activity. Who would sit down every day and write down what trade I made, why I made it, and what happened? But then one day I suffered a big loss. When I read my old journal entries, I realized I had made this mistake before. The strategy was the same. The mistake was the same. Only the day and the instrument had changed. And that's where I realized its true power. A risk journal isn't just a way to track past trades. It's a psychological map that reveals what was going on inside you at that moment. Why did you enter? Why did you exit? When did you feel fear? When did greed arise, and what emotion drove your decision? A journal is a teacher for professional traders. There's someone who teaches you every day, sometimes with love, sometimes with a slap. When you consistently post-mortem your decisions, patterns begin to emerge. You begin to understand where you repeatedly stumble, in which conditions you perform best, and when you should just take a break. And most importantly, a journal holds you accountable. You can no longer blame anyone else because every decision is documented. The accountability of every win and every loss is clear. This is the difference between a gambler and a trader. One simply reacts while the other reflects. So, if you truly want to treat trading like a profession, start your risk journal today. It will be your most honest friend, telling you the truth every day, every line. Because successful trading isn't just about chart reading. It's all about understanding yourself. And when you begin to understand yourself and analyze your decisions, only then are you ready for that final and most important step, putting risk management into practice. Look, it's easy to talk about risk management. Every book, every course, every webinar explains its principles. The 1% rule, stop loss, discipline, position sizing, and so much more. But the truth is, when the market starts moving against your expectations, when emotions run high, those very principles are the first to break down. I've seen this many times, both with myself and with others. People say, I always place a stop loss, but as soon as the price starts touching that limit, they remove it, just for the sake of one more chance. They say, I take calculated risks, but the very next day you put your entire capital on a high conviction trade without any backup plan. Practicing risk management means controlling every impulsive urge that pushes you to take shortcuts. It's the discipline that persists even when everything seems to be going against you. It's the practice that empowers you to understand and accept loss rather than fear it. I remember one day after a winning streak, I found myself overconfident. I'd made 4 profitable trades in a row, and on the 5th, I doubled my risk, thinking the market was finally on my side. But that day's loss was so large that it wiped out all 4 gains. That's where I learned that risk management isn't a temporary rule book. It should be the DNA of your trading. This means thinking about your stop loss every time you enter, setting your position size every time so that one wrong decision doesn't ruin you, and most importantly, sticking to your plan even when emotions try to distract you. Practical risk management isn't flashy. It's devoid of glamour. It may seem boring, it may seem mechanical, but this boring discipline is what keeps you in the market when others give up. With every trade, you don't know the outcome, but if your risk is under control, you know you'll stay in the game no matter what. Friends, have you ever noticed that when we start a new trading strategy, our enthusiasm is sky high in the beginning? We think, this time the market will go my way. This time everything will change. But after a few days, 2 or 3 losses occur, and suddenly that strategy seems useless. A voice within tells us, maybe it's not working. We try another method, and that's where the downfall begins. I did the same thing. I changed my strategy over and over again. Each time a new method, a new indicator, a new setup, and the same result. Initially there was excitement, then doubt, then loss, and then a new discovery. Exit. That's it. Neither happiness nor sadness. Because every trade sharpens your skills, even if it results in a loss. I once heard a saying that stuck with me: results are just a mirror, not a reflection. Meaning, results show you what you did, but they don't define who you are. They're just feedback, not the final verdict. When you start viewing every trade as a process, you move away from emotions and closer to logic. You begin to see growth even in every loss. Then you understand that profit is just the outcome, but process is your foundation. The market rewards you when you accept its unpredictable nature. When you approach each trade from a data perspective, not from emotions. When you keep your decisions rule-based and your emotions out. Remember, trading mastery doesn't mean winning every time, but rather following the same process. It doesn't mean winning every time, but following the same process every time, without wavering, without fear. Because when you focus on the process rather than the result, the market rewards you silently and gradually. But always, and this is where I learned, that focusing on the process is the soul of true trading. Yet there's a trap most traders fall into: overanalysis. Yes, the same trap I've fallen into many times myself. Have you ever noticed? Every time we lose, we focus not on the strategy, not on ourselves, but on the chart. We think, maybe the indicator was wrong. Should I change the time frame of the moving average or maybe set a larger stop loss? And that's where the journey of over-optimization begins. I used to do the same thing. After every loss, I would spend hours engrossed in the charts, backtesting, tweaking, fine-tuning, and each time I thought I'd found the perfect formula. But the market once again showed us that there is no perfect strategy. The market is like a living organism that changes daily, and when we try to understand or control it every time, we confuse ourselves. Overanalysis doesn't make us confident, it paralyzes us. I've seen traders lose not because their strategy is bad, but because they constantly change it after every trade. Each time a new rule, a new filter, a new setup, and a new result. No system can truly mature. Look, improvement is essential in the market, but frequent change is destructive. Stability is the most underrated skill in trading, because only when you give a strategy time, observe it, and live it, do you understand its rhythm. And this rhythm makes you consistent. Another dangerous effect of overanalysis is fear. When you start looking for perfection in every setup, you can't even enter. You keep thinking, wait a little longer, wait for confirmation, and by the time confirmation comes, the move is already over. I realized the purpose of analysis is to achieve clarity, not certainty, because certainty isn't possible in the market. The art of trading is to have faith even in imperfection, to remain confident even in imperfect setups, and to follow your rules repeatedly instead of constantly changing them. When I gave up overanalysis and embraced simplicity, my trading gained clarity. Now every chart looked clean, every decision was easy because my focus was on the setup's logic, not its decoration. Stop trying to impress the market, it only needs consistency. And when you learn to remain stable, the market will reward you. Not for perfection, but for patience. And when I embrace simplicity, I listen to my inner voice. Do you really believe in the strategy, or are you just pretending? That moment I realized the real battle isn't on the charts. It exists within our minds. And the most powerful weapon to win this battle is an emotional journal. Let me tell you the truth. Losing against the market isn't as painful as losing against our own emotions. When we lose, it's our ego that suffers, not the charts. And when we make a profit, we start to think we're geniuses. This emotional roller coaster distracts us from our strategy. One day I thought, why not write down every emotion that comes up? I simply took a notebook and started writing after every trade. How did I feel? Why did I enter? When did I feel scared? When did greed increase? At first it seemed silly, but gradually I began to see my habits. I realized when I was impulsive and when I was overconfident, and this awareness brought me a new clarity. Emotions in trading don't mean you become stone cold. Emotions will come: fear, anger, happiness, regret, all of them. But the difference is whether you observe them or become their slave. An emotional journal teaches you to observe. It mirrors your decisions, your triggers, your weaknesses, and when you begin to understand yourself, every market move seems predictable. Because the real unpredictability lies within us, not in the market. I noticed that every time I wrote down my fears and greed, they didn't feel as heavy. It was as if they became lighter the moment they were put on the page. Gradually, losses ceased to be emotional. They became data. Friends, today I'm going to share something with you that could potentially turn your entire trading world upside down. No, it's not a new strategy, not a technical indicator or a secret chart pattern. It's much deeper than that. Because the real battle isn't there. The real battle is raging within us, on the screen, in the charts and candles. And until you win this battle, no victory outside will be permanent. Have you ever wondered why two traders, given the same chart, similar candles, and similar market structure, make diametrically opposite decisions? Because their thinking is different. Their mindsets are different. One sees the same chart and panics, fearing a loss, while the other sees the same chart and takes action, fearing a loss. If they don't, the opportunity will be lost. Now tell me, has the market changed? No, only their mindset has changed. I myself began my trading journey with great hope and enthusiasm. I thought once I learned to read charts, money would start pouring in. But as soon as the first big loss occurred, my heart faltered. My courage began to waver. I started to feel fear with every click. The joy of profit diminished, and the fear of loss became more dominant. And this began my biggest lesson, that before understanding the charts, it's important to understand yourself. Trading is a mirror. What's inside you is reflected outside. If you have fear, that fear will make you hesitant. If you have greed, that greed will make you overtrade. And if you have doubt, that doubt will sabotage every decision in an instant. Think about it. When you trade in the market, what are you fighting? Not the market. You're fighting your emotions, your fears, your expectations, your past experiences, your insecurities. And until you understand that your mindset is the hidden driver behind every trade, you'll keep getting stuck in the same loop again and again. One day I asked myself, was I afraid of the charts or my decisions? And the answer was clear. I didn't trust myself. And unless you believe in yourself, your mindset can never be stable. You've heard that the market is neutral. The market neither benefits nor harms anyone. It simply keeps moving, up, down, sideways. The real difference lies in how you view it. If you're looking at it with fear, every move will seem like a threat. But if you're looking at it with a calm and centered mindset, that same move will become an opportunity. Mindset isn't just a fancy word. It can transform your entire reality. If your perspective is correct, even a loss will become a gain. And if your mindset is wrong, even a profit will turn into fear, fearing it might be reversed. Therefore, I believe that if you want to become consistent in trading, first clear your thinking. Recognize your hidden fears, greed, and expectations. When you connect with yourself, you begin to connect with the market. Then charts are no longer just lines. They become reflections of your psychology. Trading isn't an external game. It's an internal journey, and this journey begins with your mindset. If you change your thinking, your entire reality will gradually change, and every movement, every correction, every volatility in the market that day will work with you, not against you. So the next time you sit in front of your screen, don't just look at setups. Look at yourself. Listen to your emotions and remember that your thinking shapes your trading. Mindset isn't just everything. Now you might be thinking, okay, I understand mindset, but if I can read charts well and master indicators, can I be successful? My answer is no, not even then. And listen, why? Because this game isn't just about knowledge, it's about emotional control. I've seen many traders who possessed every technical tool, recognized every pattern, and understood every strategy. But when money was invested in the real market, emotions came to the fore. Everything collapsed, knowledge lost, and emotions won. And this defeat wasn't just on the charts. This defeat happened within. Because the biggest enemy in the market is neither another trader nor an algorithm. The biggest enemy is your uncontrolled mind. And this mind becomes even more dangerous when it's filled with fear, greed, anger, and panic. I remember one day, I had caught the perfect setup. Every signal confirmed a buy. But as soon as I took a position, the market went down a little, and my heart trembled with fear. My hands started shaking. I wondered what if it continued to fall. In fear, I took an early exit, and then the market took a U-turn and went straight up, exactly in my prediction. That day I realized that my defeat wasn't caused by the market. My defeat was caused by my emotions. This is the difference between a skilled trader and an emotional trader. A skilled trader knows that the market is unpredictable. However, their mind and emotions remain predictably controlled. An emotional trader, on the other hand, appears calm on the outside, but their every decision is driven by fear and greed. Most of us believe that more knowledge means more. It will bring success. But the truth of trading is that emotions determine your success or failure far more than you think. Have you ever observed? Even in a trade that's going in your favor, you become restless. You wait in hope that a profit might be lost, while on a trade that's losing, you sit in hope that it might come back. These hopes, these fears, these greeds, these aren't solved by technical analysis. They're solved by your inner control. Emotional control doesn't mean you won't feel emotions. It means you'll observe them, recognize them, and still act with discipline as a trader. This is the point where knowledge can fail, but emotional resilience can lead to victory. Imagine when you trade like a soldier, active, aware, and alert. Then you don't control the market, you control yourself. And when you control yourself, no volatility in the world can shake your balance. Every day in the market is a new battle, but the greatest victory comes when you defeat your own mind, because market fluctuations will always continue. But if your mind is stable, you can remain calm and make informed decisions even in every storm. So, the next time you trade, don't think about how much knowledge you have. Instead, ask yourself, can I manage my emotions? Can I recognize fear, greed, and nervousness and still make disciplined decisions? Remember, trading is an emotional game, disguised as a technical game, and only those who understand this illusion become truly disciplined traders. But now the question arises, how to control these emotions? How to control fear when money is at stake? How to silence greed when profits are shining in front of you? How to handle nervousness when the candle is moving in the opposite direction? The answer is the same, fully accepting risk. Let me tell you a truth. When I started trading, I used to do what every new trader does, deny loss. Before taking a trade, I would think, yes, this is 100% going to happen. This strategy can't fail. Stop losses are just formalities, they won't trigger. But as soon as the market moved in the opposite direction, panic set in. Heart racing, staring at the screen, hoping with every tick that this candle might reversal. And when the stop loss was hit, guilt, frustration, and anger flooded my mind. But honestly, my thinking changed the day I asked myself a simple question. Did I accept the possibility of a loss on this trade? And the answer was no. This is the biggest truth hidden within. Until you fully accept risk, your mind cannot be at peace, because you are mentally denying loss, and denial breeds fear. Imagine when you deny pain or danger, it becomes even more frightening. If there's one certainty in trading, it's that every trade can result in a loss. Yes, you heard that right. Every trade can result in a loss. And until you accept this truth wholeheartedly, you'll always be emotionally unstable. When you enter a trade, ask yourself this question. If this trade goes completely wrong and my stop loss is triggered, will I be able to accept it calmly? If the answer is yes, only then take the trade, because with that acceptance begins your first victory over emotions. I still remember the day I first accepted risk with full awareness. Before entering, I told myself, I could lose this money, and if I did, it was part of my plan. I wouldn't be afraid. And believe me, even though that trade didn't result in a profit, the peace I felt inside was priceless. I didn't panic, I didn't overreact, I didn't blame myself. And that one moment transformed my entire trading psychology. Accepting risk isn't accepting defeat, it's a sign of maturity. It shows that you understand your journey and are prepared for every possibility. When you understand that losses are part of your learning, losses stop scaring you. And then, you know what happens? You approach every trade like a game responsibly, but without emotional baggage. Each trade becomes simply an outcome, no personal attack. And this mindset makes you stable, free, and ultimately consistent. Accepting risk means calming the storm within you. And when the mind is calm, decisions become clear. Then you're not impulsive, you don't engage in revenge trading, and you avoid overtrading. So the next time you take a trade, don't just look at the charts. Ask your heart. Have I truly accepted this loss, this uncertainty, this discomfort? Because when the answer is yes, you will have become not just a trader, but a disciplined warrior. And this is the beginning of the depth from which true self-confidence arises. Because when fear disappears, confidence makes room. And now I'm going to tell you about the inner shift that sets a trader apart from the crowd. A shift that may seem simple from the outside, but transforms your entire trading world from within. When you accept risk, when you accept it wholeheartedly, something magical happens. And that magic is, the law of confidence ignites within you. This confidence isn't ego. It's not even the overconfidence of, I'll always win. It's a deep, calm, grounded energy that says, I can handle whatever the outcome. And this confidence becomes the foundation of your discipline. Look, many people think discipline is forced rule following, as if it's a checklist. Entry here, stop loss there, exit there, and you just have to follow it blindly. But that's not the case. Discipline means trusting your emotions, your reactions, and your process in every trade. And this confidence comes when you accept risk. When you know that even if this trade loses, you won't go broke. You don't panic. You don't make the mistake of removing your stop loss and hoping the market will recover. You don't make revenge trades, then you follow the plan you created with a calm mind. And think, when you act with discipline over and over again, you send a new message to your mind. I am trustworthy. I can control myself. and this self-confidence further strengthens your confidence. Confidence doesn't come from motivation or from YouTube videos. Confidence comes from action. When you make the right decisions again and again, regardless of the outcome, you prove to yourself, I can handle this process. And this assurance gradually transforms you into a calm, centered trader. I still remember the first time I accepted risk and followed my rule-based system with complete devotion. And guess what? That trade resulted in a loss. But that day I felt no guilt, no frustration, because I did everything exactly as planned. And that day I understood the true meaning of confidence. Faith in the process, not the outcome. Confidence is born when you acknowledge your emotions, but keep them under control. And discipline is the skill that transforms that confidence into daily practice. The market will test you every day, every candle, every tick. But when your confidence is tied to your rules, not just profits, you can withstand every challenge the market throws at you. Now imagine a trader who sticks to their plan, who remains calm in every situation, who doesn't overtrade, who doesn't run away from losses, and who doesn't blame themselves. Isn't this trader powerful? This is the trader who works with discipline every day, and that discipline isn't a magical quality. It's built on every decision in which you accept risk and show confidence in yourself. So, the next time you trade, don't just analyze the charts. Ask yourself, am I fully aligned with this trade? Have I accepted its risk wholeheartedly? And can I fully execute my strategy regardless of the outcome? Because when the answer is yes, you're not just taking a trade. You're giving birth to a strong, disciplined trader within you. Now the next stage is where this discipline gives you structure, a system that gives you direction even in the midst of chaos. And that's where a true trading system begins. Because without a system, without a structured plan, discipline remains just an idea. I want to ask you a simple question. Have you ever noticed that when we get carried away by emotions, decisions become impulsive? And when there's no clear plan, every decision is based on fear, greed, or panic. Now imagine if your mind is confused and you don't have a solid plan. Where will discipline come from? Discipline begins where your plan ends. If you only make a half plan, only considering an entry but not an exit, or only setting a stop loss but leaving the target open, your mind will be drowned in confusion. And believe me, confusion is the biggest plan, even if it results in a profit, your brain absorbs the message, I can't trust myself. And this message slowly creates an invisible crack inside you. You start to doubt. Hesitation begins to grow. And then comes what happens to every emotional trader: inconsistency. But when you follow the plan step by step, even if the trade ends in a loss, you create a voice within yourself that says, I did what I planned. I followed the process, and this process will bring me success tomorrow. I remember a trade where the signal was clear. Everything was textbook. I entered, set a stop loss, and set a target. But midway, the market turned sideways. Prices were fluctuating, and my mind kept telling me to exit, hoping it might reverse. But that day I told myself I would stick to my plan no matter what. And yes, the outcome was a profit. But the bigger gain was that I defeated my inner fear that day. That day I showed myself, you can do it. And when you do this repeatedly, an unshakable trust begins to develop. This trust prepares you for every decision in the future. When others are exiting in panic, you remain calm. When others are overtrading, you remain disciplined. Why? Because you believe in yourself and believe that you can stick to your rules. Self-confidence isn't an overnight success. It's a journey. It's every small decision where you followed your system, not your emotions. And this trust becomes the foundation on which your consistency is built. Imagine if you don't trust yourself. Who will you trust? Charts change, indicators fail, news is unpredictable. But if there's one thing that can be permanent, it's the promise you make to yourself. And every time you keep that promise, your confidence reaches new heights. So, I want to tell you this. The next time you're faced with a trade and your emotions try to distract you from your plan, pause for a moment. Close your eyes and tell yourself, I'll do what I've decided because I don't lie to myself. That will be the moment when you win, not against the market, but against your previous version of yourself. This victory gradually gives birth to a trader who is tough on the outside and unwavering on the inside. Now that the foundation of self-trust has been laid, the next step is to break the biggest myth, that success comes only from profits. Consistency comes from process, not outcomes. And that's where we'll go now, where you'll learn that beyond every outcome lies a bigger win. Because the biggest misconception about becoming a trader is that profit is everything. We're taught this from the very beginning. The more you earn, the better the trader. They too get caught up in the same race. They only want an outcome from every trade, a result, and money. But no one tells us that true consistency comes from the process, not the result. Today, I want to share a very personal and bitter truth with you. You can't win every trade. Yes, you heard that right. No matter how much analysis you do, even if you have the best strategy in the world, some trades will still result in losses. And if you base your entire confidence solely on the outcome, every loss will break you. This is the trap 90% of traders fall into. They follow the plan, demonstrate discipline. Yet, if they don't get results, they start doubting themselves. They wonder if they're a bad trader or if their strategy is useless. But this is where the difference lies between a new trader and a disciplined, consistent trader. A consistent trader doesn't consider the outcome as the ultimate goal. Their focus is, did I follow my rules? Did I do what my process told me to do? Because he knows that if he follows the process every time, the outcome will automatically turn in his favor. I still remember the first time I took 5 consecutive losing trades. Each trade was according to my plan. There were no emotional decisions, no panic. Everything was done methodically, but the outcome was all losses. And believe me, at that moment a voice inside me said, maybe this isn't working, I should give up. But then I told myself one thing. I don't control the outcome, but the process is mine. And as long as I hold on to it, I can't lose. What happened next? The next year, 5 trades turned profitable, and those profits were a reward for the same strategy, the same mindset, and the same discipline that I had maintained even during losses. That day, I realized that consistency means trusting the process to win under all circumstances. See, the market is a game of probabilities, not certainties. Even if you enter every trade with a 60% winning probability, that 40% can turn into consistent losses. But if you stick to your process, it's what will lead you to victory in the long term. Process is the anchor that sustains you through every storm. When the market goes against you, you don't panic because you know, I did what the system told me. And this mindset protects you from emotional noise. In trading, short-term results never define long-term potential. If you only focus on today's profit or loss, you may lose confidence every day. But if you measure your actions, your mindset, and your discipline, you're on a path that makes you stronger every day. So, I'll tell you this. Don't make the outcome your God. Consider it a byproduct. If you truly worship the process. That's the key to your consistency. And when you reach this level, when you accept every outcome with neutrality, when you ask yourself after every trade, did I do my best? Only then do you become a master, not a trader. Now we stand at the door where the real trading journey begins. Yes, you heard right. Everything we've learned and understood so far was preparation, a training to embrace the ultimate truth. If you want to conquer the market, you must first conquer yourself. I want to ask you a question. Have you ever realized that sometimes you do everything right and still lose? And sometimes you make mistakes, yet luck favors you. Why does this happen? Because the market isn't a human being that rewards you according to your actions. The market is neutral, emotionless, and completely unpredictable. But the one thing you have 100% control over is yourself. And this is the most powerful place from which a true trader emerges. I remember my early days in trading. Every candle would press a button inside me. Sometimes fear, sometimes joy, sometimes anger, sometimes greed. Every tick controlled my mood, and when I lost myself, strategy, knowledge, and experience were all for naught. Then one day, a bitter realization came. I wasn't losing to the market. I was losing to myself. I was losing to my emotions, my inner fears, my impatience, my hopes, and my own expectations. And that's when I decided, now I will focus on inner victory, not external battles. Mastering yourself doesn't just mean meditating or appearing calm. It means listening to every invisible conversation going on inside you that scares, provokes, and distracts you. And then, despite all of that, remaining calm and taking the right action. To win in trading, you must be able to read your mind more than the charts. Your greatest technical skill should be recognizing when your ego is making decisions. When is your fear driving you to exit, and when is your greed driving you to enter? When you begin to understand your own patterns, you see every trap that was previously hidden. And the most interesting thing is, when you begin to master yourself, the market automatically seems easy. You analyze every trade carefully, not by overreacting. You consider every loss a learning experience, not an emotional trauma, and you consider every profit a part of the process, not a celebration. Trading then becomes a transformation, a journey where charts show you the world. No, they reflect your own self. Now imagine if every candle is testing your patience, if every volatility is straining your discipline, if every trade is challenging your clarity. Is this just a game of money? No, it's a playground of self-confidence. And the trader who knows, understands, and manages themselves in this playground is the one who can fearlessly navigate even the world's most dangerous markets. So the next time you go to click the mouse, don't just look at the chart. Look at yourself. What's going on in your mind? Are you making decisions with clarity, or is some inner fear, some inner noise shaking you? Because ultimately, remember one thing, controlling the market is not in your hands. But if you control yourself, no market, no trend, no signal can shake your confidence. Self-confidence is the ultimate edge, and when you achieve this edge, you become not just a trader but an artist, painting every candle. He feels every price movement like music, and most importantly, he makes every decision with inner peace. This is the point where profit becomes just a bonus, because you've already achieved the real victory over yourself. Now the question is, are you out to beat the market or conquer yourself? The answer lies within you. And that's where the journey of the disciplined trader begins. Thank you. Friends, when I entered the world of trading, I had a dream, financial freedom, a life where I wasn't beholden to anyone, where I had the power to make decisions and money just flowed. But soon the truth behind that dream became clear to me. This path wasn't as easy as it seemed. I noticed that most people start with fundamental analysis. They look at company numbers, read the state of the economy, analyze reports, and then trade. But often, despite good fundamentals, prices fall. Why? Then I adopted technical analysis. Charts, indicators, patterns, RSI, MACD, Fibonacci, them all became my daily routine. I understood every pattern, tried to decode every signal, yet the market often ignored my calculations. I used to wonder why, despite all my hard work, I wasn't consistent. And then I understood the third pillar, mental analysis. This is where the real game begins. This is the part most traders overlook. We all want to change the market, but not ourselves. The reality is, no one can control the market, but we can definitely control our minds. I learned that trading isn't just a game of knowledge. It's a game of discipline, belief, and a specific mindset. If you can't maintain emotional control, if you can't accept losses, if you look for certainty in every trade, then this journey is going to be very painful. Fundamentals and technicals, these are important. Yes, but they're incomplete. Unless you understand yourself, your belief system, your fears, and your expectations, you can never be consistent. And this is where my real learning began. I asked myself questions like, why am I afraid? Why do I hope? Why don't I trust myself? And the answer to each question took me a little deeper and a little stronger. If you truly want to be a successful trader, understand these three pillars: fundamentals, technical, and most importantly, mental. Because in the end, the market only delivers what you're willing to give yourself. But this begs the biggest question. If this is so clear, then why do most traders struggle? Why do thousands of people start trading every year, but give up or break down after just a few months? When I started delving deeper into this question, I realized the problem isn't with the strategy. The problem isn't with the system. The problem lies in our thinking. We think of the market as something we can win, like a war or a game we can perfect by practicing repeatedly. But the market isn't like that. It's a neutral reality. It's neither in your favor nor against you. But our minds always try to tilt it in our favor. We seek certainty in every trade. We want to be right every time, and that very thinking destroys us. Many people think they can just find a one-shot strategy and everything will be fine. But that's not the case. The market changes every moment, and unless your mindset is flexible, you'll be devastated by every change. Traders struggle because they can't accept loss. He thinks that if he makes a wrong trade, it means he's wrong. He attaches his self-worth to his trading results, and this emotional attachment blinds him. He engages in revenge trading, overtrades, or even avoids trading out of fear. I've experienced this myself. Every time a trade ended in a loss, it felt like I'd failed. The foundation of my confidence was shaken. But one day I asked myself, am I fighting the market or myself? This is when my struggle began to end. When I learned to separate my identity from the trade results. When I understood that losses are also part of learning and they don't define me. Every trader needs to learn that success is not just about success. Success doesn't come from strategy, it comes from mindset. When you learn to control yourself instead of controlling the market, only then can you survive in this game. Struggles arise because we try to change everything on the outside. Charts, indicators, strategies. But we don't change anything on the inside. And to be honest, that's the biggest mistake. When I started to transform myself, the first thing I did was examine my old belief systems, and there I encountered a huge wall, the wall of fundamental analysis. Initially, I had learned that the true value of any asset is determined by its fundamentals. How much profit is it? Is there growth in the company's revenue? In which direction is the economy going? After reading all this, I thought I understood where the price would go. But gradually, a bitter truth emerged. The market doesn't always follow logic. Many times I've noticed that even after a company's excellent quarterly results, its shares are falling, and sometimes despite a company's poor performance, its shares are soaring. I wondered what's going on. I was perplexed because I'd done the right analysis, but the results were the opposite. I realized that through fundamental analysis, I can understand the value of an asset. But I can't predict what the price will do. The market is a dynamic psychological environment. Millions of traders and investors are making decisions based on their emotions, expectations, and fears. Price isn't just the outcome of numbers, it's a reflection of psychology. And this is where fundamental analysis begins to fail. I'm not saying that fundamentals are irrelevant. Yes, they're an important tool for long-term investing. But if you're trading, especially short-term or intraday, relying solely on fundamentals will lead you into confusion. I learned that unless you understand the psychology of the market, you can't predict its movements, and fundamental analysis, no matter how logical, doesn't connect you to that psychology. Often we take trades based on data, but the market interprets that data differently, leaving us confused and frustrated. But the problem isn't with the data. It's with our understanding. Fundamentals give you a framework, but the market breaks that framework. And unless you embrace that fluid nature, even the most accurate analysis can lead to the wrong decision. This is where my focus shifted from fundamentals to psychology, because to understand the market, I first had to understand the trader and, above all, myself. Once I accepted the limitations of fundamental analysis, I turned to technical analysis. I felt like this was the weapon I was looking for. Charts, indicators, trend lines, support and resistance, candlestick patterns, everything offered me a new hope. Initially, technical analysis offered me an illusion that I could now decode the market. I believed that if the RSI was oversold, the price would go up. If the moving averages crossed, a new trend had begun. It all seemed so systematic that I thought I had the game under control. But then the same thing happened. The signals came, I took a trade, and the market didn't do what I expected. Sometimes the pattern failed. Sometimes a breakout became a trap. Sometimes a trend reversal resulted in a loss, and I was confused again. Why did the price move in reverse despite such an accurate strategy? Then I realized that technical analysis doesn't provide certainty. It only shows possibilities. But we traders mistake it for certainty, and that's the biggest deception. We mistake every chart pattern for a magic formula. We think that if this pattern has worked before, it will work again. But we forget that every trade, every moment brings a new psychology to the market. Every time people look at the charts, they have a different mindset, different emotions, and different decisions. Technical tools show you a map, but they don't tell you whether there will be traffic at the next turn. And when you accept the map as reality, you become blind. I've seen this as the biggest mistake traders make. They look for certainty when the market itself is built on uncertainty. Technical analysis is useful and powerful, but it never guarantees the future. This is the most dangerous thing in trading. When you think you're sure, and the market proves you wrong. When I broke this illusion, a huge weight lifted from my mind. Now I understand and respect charts, but I don't worship them because the market is never controlled by any single rule or formula. He changes every As before, I felt angry and frustrated. But this time, I asked myself why I was so upset. Was I unhappy with the trade or with the shattering of my expectations? And that's where I found the answer. My unhappiness was coming from the rigidity of my thinking, not the market. This realization began to transform me. I learned to work on myself, not the strategy, every time. When I started paying attention to my emotions, I saw when fear was triggered, how greed could misdirect decisions, and how overconfidence could lead to defeat. Trading was no longer an analytical skill for me. It became a self-awareness practice, a practice in which every trade was a lesson, every price move a signal, and every emotion a guide. This shift to psychology wasn't easy because it meant acknowledging my weaknesses, seeing my mistakes, and looking within. But this was the work that was most important. I found that when you begin to understand your own psychology, you avoid impulsive trading, avoid revenge trading, and most importantly, you break free from the illusion that you can control the market. Now, my trades come from clarity, not fear. Patience and discipline have become my weapons, and all this was possible because I shifted from analysis to psychology. Trading is no longer just a way for me to make money. It's a mirror that introduces me to my own mind every day, and this is the biggest edge, something no chart can teach, but your own mind can. But once you understand this, the next question is how to develop a mindset. A mindset that transcends fear, doesn't get carried away by greed, and remains stable even after every loss. Initially, I thought mindset meant positive thinking or constantly motivating oneself. But gradually, even this illusion dissipated. A trading mindset isn't formed by any motivational quote. It's formed by the raw, uncomfortable, and sometimes painful truth within. By accepting this, I learned that the right trading mindset is the foundation of acceptance. Acceptance. Accepting that I could be wrong. Accepting that the outcome of every trade is not in my control. Accepting that the market doesn't work in anyone's favor. It just works. When I started accepting this, the anxiety within me gradually calmed down. Before, a loss would shake my confidence. Now that same loss doesn't disturb me because I now know that a loss isn't an insult, it's just a result. The right mindset means viewing every trade as a neutral event, neither getting too excited nor too disappointed. It means focusing on your process in every moment, not the outcome. I also understood that mindset is built on daily discipline. Maintaining a trading journal, noting my emotions, and being brutally honest with myself all shaped my mindset. Another crucial element was patience. Trading teaches us that nothing happens quickly. The market doesn't move at your speed, and if you develop a mindset focused on making quick money, your mind will never be at peace. Mindset is a muscle. And just like you endure pain every day to build muscle in the gym, to build the right trading mindset, you have to observe your fears, greed, and ego every day. And the most beautiful thing is that when your mindset is right, you begin to view the market as a game in which your biggest competitor is none other than yourself. That's why I always say that mastering trading means mastering yourself. And this journey begins when you become an observer before a trader. An observer of your own mind. This is the mindset that gives you clarity even in the chaos of trading. And when your mind is working, only then does the market begin to speak your language. So when I look back at the beginning, when I was just chasing profits, changing strategies, trying to manipulate charts, I understand the value of where I am today. Trading is not a shortcut. It's a deep journey where you learn less from the market and more from yourself. Fundamentals give you knowledge, technicals give you tools, but mental analysis gives you the perspective that is incomplete without both. And when you combine these three pillars, you are no longer just a trader. Then you become a disciplined, emotionally aware performer. The real essence of this chapter is that trading success comes from within, not from without. Change your thinking before changing your strategies. Know yourself before relying on indicators, and conquer your mind before conquering the market. Because winning in trading isn't just about money. It's about that inner peace that's reflected in every decision. That clarity, that care, and that control resides not in any chart, but only in your mindset. And when this mindset is established, You're in the zone in trading where there's no fear, no greed, just flow. Thank you. My friends, today I want to speak to you from my heart because whenever I think about this topic, something inside me starts to feel unsettled. Trading, the market. People think it is just a game of charts, graphs, and numbers. But believe me, it is much deeper than that. Whenever you take a trade in the market, it is not just pressing a button. It is a beautiful yet dangerous combination of your mind, your hopes, your fears, and your imagination. Think about it. When you decide to buy, why do you do it? Because you believe the price will go up. And when you sell, why? Because you believe the price will go down. That means price movement is actually the collective expression of the hopes, expectations, and fears of millions of traders. I remember when I first started, I used to think price was just a number. But slowly I realized that price is telling a story. A story whose main characters are you, me, and millions of unknown traders. Behind every trade, there is a reason. Someone wants to become rich quickly, someone is running away from losses, someone wants to outsmart the market, and someone has already been hurt by it. And when all these people bring their thoughts into the market together, that becomes price. That is why I say understanding price movement is like understanding the human mind. It is psychology, raw, naked, and exposed. Many times when price goes up, we think a rally has started, and we jump into it. Then suddenly it starts falling and we feel the market has betrayed us. But the market never betrays. It only reflects collective beliefs. These collective beliefs are the invisible force that keeps pulling price from one place to another. When millions of people become afraid, panic selling happens. When greed takes over, euphoric buying happens. And in this tug of war, price keeps dancing. You might think charts have patterns. Yes, they do. But those patterns are not of price. They are patterns of our minds. The same old mistakes, the same fear, the same greed repeating every time in a new form. To me, the most beautiful part of trading psychology is this. Price movement is actually a mirror of the psychology happening inside us. If you learn to read it, you are not just reading charts, you are reading the human mind. And that is the moment when the journey begins, from being an average trader to becoming a disciplined trader. When you stop seeing price as just numbers and start seeing it as the collective heartbeat of human emotions. I want that the next time you look at a candle on the chart, you try to feel the fear, the hope, and the greed behind it. This is not just lines and bars. This is the heartbeat of millions of traders like us, coming together to form the price you see. So from today, let us start seeing price with a new perspective. Because until you see price movement through the lens of psychology, you will never understand the real game of trading. Now let me ask you a question. Have you ever thought what trading really is? Some people call it a game, some call it a business, and many people call it gambling. But my friend, the truth is much deeper and harsher. Trading is actually a direct clash between two different beliefs. Think about it. When you press the buy button at the same moment someone else is pressing the sell button, both of you honestly believe that you are right. You think price will go up. They think price will go down. Now tell me, who is right? This is the most interesting and painful reality of trading. There is no absolute certainty here. There are only probabilities. And these probabilities create confusion in our minds. I clearly remember when I took my first big trade. I went long with full confidence. I thought this was it. I had hit the jackpot. But within a few hours, the market started moving in the opposite direction. My confidence turned into fear. I kept looking for support on the chart, trying to convince myself that maybe it would bounce from here. But the market kept falling mercilessly. And then I did what every new trader does. I kept moving my stop loss lower. It felt like the market was mocking me. But what was the truth? The market was doing nothing. It was simply reflecting the collective psychology of buyers and sellers. I was the one hurting myself because of my expectations. This is the nature of trading. It is a constant battle between expectations and reality. The more certainty you search for, the more the market will frustrate you. Because certainty does not exist here. Every price tick is the result of a tug of war between two opposing beliefs. You think price will go up while someone else is equally confident it will go down. Both are firm in their analysis. And in the end, the market moves toward the side with more conviction, more capital, and more psychological energy. That is why ego is the biggest enemy in trading. You think you know what will happen, but the market does not care about your personal belief. It only cares about collective psychology. It will do what the mass psychology dictates, not what you think. And that is why, as a trader, you must accept this cruel nature of trading. There is no certainty here, only possibilities. Your job is to read these possibilities, control your emotions, and trade with discipline. When you start seeing trading this way, you stop fighting with ego. You stop trying to prove yourself. You start following the process. Then you do not get angry at a losing trade. You accept it as a natural statistical outcome. And this mindset shift is what transforms an average person into a disciplined trader. Think about it. Are you ready for this? Can you make your mind flexible enough to see every price tick not as an emotional battle, but as a neutral probability game? This is the real nature of trading. And when you truly understand it, you stop fighting the market. You learn to flow with it. And believe me, that is where real success begins. Thank you, my friends. Now try to imagine this in your mind. Millions of traders from different places with different experiences are trading in the market every second with their own beliefs, hopes, and fears. Some are buying, some are selling, some are trading based on news, some are trading based on technical patterns, some are panicking, some are acting out of greed, and the combined effect of all of this is price movement. It is a dynamic energy that never stops. Every tick, every candle, every volume spike, behind all of this, people's thinking is changing. Their emotions are evolving every moment. And that is the magic of market dynamics. The market is like a living organism. It breathes, it runs, it gets tired, it pauses. And its behavior keeps changing. Sometimes it moves in trends, sometimes it moves in ranges, sometimes it moves very fast without reason, and sometimes it suddenly stops. How many times have you seen a perfectly clear trend on the chart? You feel confident, you think this trade is guaranteed, and the moment you enter, the market reverses. Why does that happen? Because the market is not a predictable machine. It is a collective dance of changing beliefs. I remember once I saw a perfect breakout. Everything looked ideal. As soon as the candle closed, I entered a buy position. The very next minute, the market moved in the opposite direction. At that moment, I thought, how is this possible? The pattern was so clear, but I had forgotten something. The market does not move based on patterns. It moves based on psychology. In reality, many traders were watching that breakout. Everyone bought, and some big players used that liquidity to take their profits. That is market dynamics. Price is not just lines and candles. It is a battlefield of traders' collective psychology and their strategies. And how long can you survive in this battlefield? Only as long as you understand market dynamics. Only as long as you can see what is behind price movement. Sometimes there is manipulation. Sometimes there is genuine demand and supply. Market dynamics teaches you patience. It shows you why impulsive trades fail. It helps you understand how volume can give clues about where the crowd is. It teaches you how to differentiate between false breakouts and real breakouts. But none of this is easy. You have to learn to communicate with charts. You have to feel the psychology behind every candle. You have to hear the breath of traders in volume. Only then can you understand the flow of the market. To me, the most fascinating part of trading psychology is this. You are looking at charts, but in reality, you are reading the story of millions of minds. And when you reach this level of understanding, trading stops being an emotional roller coaster. It becomes a calculated art. Now think about it. Are you ready to learn this art? Do you want to see charts not as price lines, but as a living crowd? If yes, then believe me, you are stepping into a rare category of traders who do not just predict the market, but feel it. And the biggest edge in trading lies in this feeling. So now let's start decoding market dynamics. Because only when you see the market in its dynamic nature, you learn how to swim in the deep ocean of trading, where fear and greed do not control you, but you control them. My friends, when you begin to see the market in its constantly changing nature, you enter a deeper level of trading, a level where fear and greed no longer control you. And from here comes another powerful truth that becomes a turning point in every trader's journey. I am talking about reference points. Think about it. When you look at a chart, where does your attention go first? Old highs, old lows, support, resistance. These are reference points. But have you ever thought why these levels are so powerful? Because trading psychology is not just happening in your mind. It is collective psychology. That means the levels you are seeing, millions of traders are seeing them too. And when millions of people make decisions based on the same levels, those levels become powerful. I remember once I saw a level where price kept bouncing again and again. 4 times price reacted from there. I was completely convinced it was a strong support. But the moment I took a heavy position, the market broke that level. That day I realized something important. Reference points are not just levels. They are power centers of emotions. Because every time price reaches those levels, traders make decisions based on their past experiences. If someone made profit there before, they want to buy again. If someone took a loss there, they want to exit at break even. That is why reference points contain concentrated psychological energy. Support and resistance work because people believe in them. And when more people believe, more orders are placed. And more orders mean a higher chance of reaction. But there is another side. When too many people focus on the same level, that level can become a trap. Big players understand this psychology. They know where stop losses are placed. They push price there, trigger those stops, and then reverse the market. That is the cruel nature of market dynamics. Reference points are built from collective memories and emotions. Every time price reaches there, memories come back. Profit, fear, regret. So next time you look at a chart, don't see these levels as simple lines. See them as places where emotions gather, where psychological battles happen. And the trader who understands this battle moves far ahead of others. Think about it. Next time you see a previous high, will you see just a line? Or will you see how many traders are in profit, how many are waiting to exit, and how many are planning new entries? That is the true significance of reference points. They are not lines. They are living museums of trader emotions. And when you start seeing them this way, you reach a level where you don't just see candles, you see crowd behavior. When I first saw charts, they felt confusing. Lines moving up and down, big candles, heavy volume. Nothing made sense. But when I started seeing patterns through the lens of psychology, everything slowly became clearer. Why do patterns repeat? Head and shoulders, double tops, triangles. Is it geometry? No. It is repeated behavior, repeated fear, repeated greed, repeated reactions. And when millions of traders repeat the same behavior, patterns appear. I once saw a perfect ascending triangle, exactly like a textbook example. I was sure it would break out, but when the breakout happened, heavy selling came in. Price dropped. At that moment I felt frustrated, but later I understood. Patterns are not just visuals. They are projections of psychology, and psychology can change at any moment. That is why patterns fail. They are not guarantees. They are footprints of behavior. My friends, when you learn to see patterns as the heartbeat of traders, you move from a mechanical trader to a psychological trader. And from here comes another level. Trends and market moods. Patterns show short-term psychology, but trends show long-term emotional movement. An uptrend is optimism growing. People buy every dip. They fear missing out. But over time, confidence weakens. Profit booking begins. Late entries panic. And trends start to change. A downtrend is fear growing. At first people deny it, then panic, and price falls faster. Trends are emotional highways. And if you can read them, you can anticipate crowd behavior. But now comes the most important question. Even if you understand psychology, patterns, trends, can you manage your risk? Because in trading, profit and hold losses, hoping the market would turn. My friends, a strong mental framework makes you stable. It teaches you to see every situation with the same perspective. Not too excited, not too afraid. Think about this. If you are watching a cricket match and your heart races at every ball, you jump at every run and panic at every wicket. Can you ever think like a captain? A captain sees the entire game from above. He evaluates every situation calmly and makes decisions with a clear mind. That is exactly what trading requires. When I started training my mind to think like a captain, real change began. I reminded myself every day, whatever's happening is just another opportunity. It does not define your destiny, and it does not define your ability. Your job is to think correctly, follow the process, and leave the rest to the market. Slowly, my mind began to form a framework. Now, whether the market was rising or falling, I remained calm. I began to understand that my real enemy was not the market, but my expectations, my fear, and my greed. This is the mental framework I am talking about. If you can build this, you have already won half the battle, because your mind will not panic, will not get confused. It will stay grounded in its process. So let us walk this journey together. Let us shape our mind into a strong fortress, where storms may come from outside, but inside everything remains calm. And then you will see, success will slowly knock on your door. But here comes another question. Is this enough? Is building a mental framework all you need for success? No, my friends. This is where the real story begins. Success is not an overnight miracle. It is a slow, deep, and sometimes painful process. It is like growing a tree. You plant a seed, prepare the soil, water it. But does it give you shade the next day? No, it takes time. And during that time, you must have patience. You must have faith that what you are doing will eventually bear fruit. In the same way, when you start changing your mind in trading, you must first face your old habits, your old fears, and your false expectations. And believe me, this is not easy, because the mind keeps running back to the same old patterns. I remember during this transformation, many times I told myself, maybe this is all nonsense, maybe I should go back. But every time a quiet voice inside me said, wait a little longer, do not give up yet. This pain is part of the process. This is the real process of success. It breaks you from within so you can rebuild yourself into something new. There will be times when you feel ashamed of your own weaknesses, times when you feel frustrated with yourself for not understanding things earlier. But those are the moments when real change is happening. I realize that success is not just about trading strategies or understanding the market. Real success is understanding yourself, accepting yourself, and working on yourself. I trained my mind to see every movement in the market as just an event, not something to celebrate too much, not something to fear. This process was long. Many times I repeated old mistakes, took losses, and got angry at myself. But every time I reminded myself, this is part of the process. If you don't go through this, you will never learn. Another important thing in this journey is compassion. Compassion for yourself. To observe every step with understanding, to turn every setback into a lesson. If you truly want to become one of those few traders who survive in the market long term, who can control their mind and their emotions, then be ready. This is a beautiful but difficult journey. It will drain you from within. But one day, when you look back, you will smile at your old fears, your old greed, your false expectations. And that day you will truly say, yes, I have changed. Now I am capable of success. And from that point, something very powerful begins. Objectivity. The ability to see things as they are, without creating stories, without coloring them with fear or hope. When we look at the market, it is simply moving up and down. It is not trying to hurt you. It is not trying to help you. But we project meaning onto it, because of fear, because of greed, because of hope. I used to do the same. Every chart looked like either an opportunity or a threat. My mind was always speaking, act fast or you will miss it. Wait, or you will repeat your mistake. And that is where losses begin. Then one day I asked myself, am I really seeing the market as it is? Or am I seeing it through my emotions? That day I realized, if I want to succeed, I must learn to see price without any story. Just price, just data. I trained my mind for this. Whenever fear came, I told myself, this is just imagination. Look at the chart. What is price actually doing? Whenever greed appeared, I reminded myself, this is just one candle. It does not contain your future. Slowly, my mind started to change. The same charts that once scared me now showed me only information. That is the power of objectivity. And from there, you go even deeper. You begin to see your own behavior patterns. Because the real battle is not outside, it is inside you. I started journaling every trade. Why did I take this trade? What was I feeling? Slowly, I started seeing patterns. Fear during volatility, greed during strong moves, past losses affecting new decisions. And then I realized the biggest enemy in trading is not the market. It is your own mind. When I learned to recognize these patterns, real change began. But awareness alone is not enough. You must release that emotional energy. Otherwise, it will stay inside you and control your decisions. So I created a routine. After every trade, I sat quietly, closed my eyes, took deep breaths, felt the emotion. I did not run from it. I observed it. And I told myself, you are fear, you are anxiety, but you will not control me anymore. Slowly, peace entered my mind. And for the first time, I could see the market clearly. And then came the most powerful part: beliefs. Your decisions are rooted in your beliefs. If your beliefs are weak, your actions will be unstable. At first, I never paid attention to my beliefs. I only focused on systems, charts, and strategies. But deep inside, my mind kept saying, you always lose. This is not for you. And that belief was destroying even my good trades. Then one day, I made a promise to myself. I will build beliefs that support my success. I will not stay in a negative story anymore. Every morning, I told myself, I am a disciplined trader. I trust my system. My mind remains calm. I am here for the long run. At first, these felt like empty words, but I did not stop. I repeated them every day. Slowly, they started sinking into my mind, just like rain softens dry soil over time. Now the same person who used to panic at every red candle remained calm. A new voice inside me said, this is just price. Your job is to stay with your process. No rush, no fear. I realize beliefs take time to grow. They must be nurtured daily. And when your beliefs become part of you, your decisions stop coming from fear or greed. They come from stability. This is the real investment. People spend money on systems and indicators, but ignore their beliefs. But the truth is, with strong beliefs, even an average strategy can work. And with weak beliefs, even the best system will fail. And from there, a winning attitude is born. A winning attitude does not mean winning every trade. It means not being afraid of loss. It means accepting every outcome calmly. That is real winning. I remember how I used to break down after every loss. But now, I can smile at losses. Because I understand this is a long game. One trade does not define anything. A winning attitude means trusting your process so deeply that no result can shake you. It means focusing your energy on discipline and improvement, not on ego. And when this attitude develops, the market stops being a place of fear. It becomes a place of opportunity. You no longer rush to prove yourself. You no longer feel like a failure after a loss. And that is when you truly understand winning. Winning is not about money. It is about mastering your mind. And when I look back today, I realize something. I did not conquer the market. I conquered myself. My real trades happen inside me. Every moment I control greed. Every moment I stay disciplined in fear. That is my real profit. Success is not something that comes from outside. It grows within you. In your thoughts, your attitude, your behavior. Many people come into the market to make money, but only those who master their mind become true winners. So remember this. This is not just trading. This is a journey of the soul. Every loss teaches humility. Every profit teaches balance. And every day you become better than yesterday. That is the real victory. And, my friend, that is the true magic of this journey. Thank you. Friends, when I first heard about trading, my mind was filled with a strange light. A world where money could be made with just a laptop and an internet connection. No boss, no office, no deadlines, just charts, my own rules, and a dream of living life on my own terms. I remember the first time I saw a trader sitting in a quiet cafe, sipping coffee and staring at his mobile screen. No tension, no hustle. And at that very moment, a desire was born within me. Can I do this too? Is it possible to take control of my own life? In the beginning, it all seems like a fantasy, and perhaps that's why trading seems so appealing. The thought itself is so intoxicating. Waking up in the morning waiting for the market to open. Once you find the perfect setup, you execute the trade, and within hours, the money is in your account. Social media makes this dream even more vivid. People show off their green trades, their luxurious lifestyles, their freedom, and the notifications of profits that come mornings and nights. It seems as if trading is a magic wand. Just wave it at the right time and the money will start pouring in. But this is where the real dangerous journey begins, because we get so lost in this dream that we stop seeing its reality. We become so seduced by the allure of this freedom that words like discipline, patience, and mindset start to seem boring. This is what happened to me. When I started trading, all I could see was money. I thought that if I made a profit in just 1 or 2 trades, everything would change. And when those initial trades actually made profits, I felt like no one could do this better than me. But that very dream gave me a shock I never could have imagined. The day I lost thousands of dollars in a single day, my hands were shaking, my heart was pounding, and my mind was spinning. That's when I realized trading isn't just a way to make money. It exposes all your inner weaknesses. Lost in this dream, we forget that every freedom comes with a price. And in trading, that price is self-awareness, control, discipline, and above all, psychological strength. When I honestly asked myself whether I was chasing this dream or whether I truly had the capability to live it, that's when I felt a shift. Because everyone dreams of trading, but very few truly prepare themselves for it. This chapter, this journey, is for everyone who has the courage to understand themselves, not just profits. Because success in trading doesn't come when you understand the market. It comes when you learn to face yourself. And the truth of this dream is that it is indeed possible, but only if you develop the level of maturity and discipline within yourself to handle this journey. Because this dream is as beautiful as it is brutal. And only if you understand this balance will you deserve the freedom you dream of. But let's be honest, most people, before they understand this balance, fall prey to the one deception that has destroyed most traders, the illusion of easy money. When we first look at charts and begin to understand price movements, our minds form a dangerous assumption. Hey, it's that simple. Just buy low, sell high. Profits are guaranteed. And that's where an illusion begins that eats away at the trader from within. The world of trading seems so tempting from the outside, so convenient, that we assume we can do it easily. A few YouTube videos, some strategies, a couple of indicators, and then profits pour in. But the truth of trading is much deeper than that. I remember the first time I made a profit, a different kind of confidence came over me. It wasn't just confidence, it was overconfidence, and that overconfidence was slowly leading me toward an abyss that had no bottom. I've seen many traders enter simply because they think a pattern has formed. They believe they'll make money, but this presumptuous mindset is the most fragile. The market never moves on anyone's certainty, and there's never any guaranteed money in trading. But once our minds catch this illusion, they begin to perceive every loss as an insult. And that's where the emotional downfall begins. The illusion of easy money first destroys your discipline. You think you'll hit the jackpot every time, so you break the rules. You take more risks. You remove your stop loss thinking you'll make money this time. When you don't, what's lost isn't just your account, it's your self-belief. I've found myself in a time when I thought every other day that I would make a big profit and change everything. But every time that mindset led to more losses, and every time I found myself stuck in a question. If it seemed so easy, why was it so difficult? Then I realized illusions seem easy, but reality doesn't. And traders who don't understand this gap slowly lose. Gradually, you lose your confidence, capital, and clarity. Making money in trading is possible, but it's not easy. And for those who believe it's easy, the journey becomes painful. I'm not saying you should be afraid or retreat. I'm simply saying recognize the illusion, because as long as you hold on to that lie, you won't be ready to embrace the truth that makes this journey truly powerful. And that truth begins where you believe that money isn't easy, but it can be earned. But the most interesting and perhaps most dangerous thing about trading is that even when you recognize this illusion, you still can't completely disentangle yourself from it. Because trading isn't just a financial activity. It becomes an emotional experience, and very quickly this experience turns into an addiction. Initially, you think you're in control. You say, I'll just take a small trade. The market seems to be trading low today. When that small trade unexpectedly turns profitable, a chemical reaction occurs within you. A dopamine surge, a sensation that draws you back for the same thrill. Now you think, if it can happen once, why not again and again? And this begins a cycle, a loop, where you want to feel the same excitement, the same adrenaline, every time. Trading now moves beyond calculation and becomes a game of sensation. I've often found myself in moments when I've been watching charts until 2 a.m., just hoping I might spot a setup. I wasn't trading for profit, I was trading for the feeling. The feeling that I'm active, I'm connected to the market, and maybe the next candle will give me a jackpot. This is the same pattern a gambler follows. But the only difference is that a gambler accepts it openly, and a trader calls it a strategy. Addiction develops when you can't disconnect from an activity, even if it's causing you losses. And in trading, this addiction grows within you in the most silent way. You trade after a loss just to recover. You trade after a profit because you feel unstoppable. You trade out of boredom for excitement. And sometimes you trade simply because you haven't done anything in a day. And the mind says, let's do something. This addiction distances you from the system. It pushes you toward impulsive decisions. And most of all, it slowly destroys your awareness. I remember the day I looked at myself in the mirror and asked myself, am I really trading or just following that feeling? And that day, for the first time, I was afraid of myself. Because if you don't recognize addiction, it gradually becomes your identity. And if your trading identity is built on addiction, it always ends in regret. But if you can replace this addiction with awareness, you can regain yourself. Then trading no longer controls your mind, rather you approach it purposefully. Trading then ceases to be addictive. Then it becomes a disciplined art, a practice where you settle for stability, not sensation. But before you reach stability, another dangerous turn arises: overconfidence. This is the most silent killer because it deceives you in a very sweet tone. When you enter trading and your first few trades turn profitable, you create the illusion that you have understood the game. The charts begin to speak your language. Signals become crystal clear, and every decision you make is making you a winner. You feel like you're now unstoppable, and this is where the first step to downfall begins because you stop listening. I still remember the day when I made 3 consecutive profitable trades. The strategy was working every time. The market was validating my analysis, and my confidence was sky high. Then came the 4th trade, with the same strategy and the same Revenge trading, overtrading, and every time you surrender your logic to your emotions. I realized that my good days only came when my mind was calm, and my bad days began when I started aligning the market with my mood. The market doesn't care whether you're happy or sad. It doesn't operate according to your feelings, but we start viewing it through the lens of our expectations, our fears, and our greed. And that's where the trouble begins. Emotional highs are dangerous because they push you to take more risks. Emotional lows are dangerous because they bring you closer to giving up. The trader who strikes a balance between these two extremes survives in the long term. I learned that emotional lust precedes trading strategy. You have to learn to observe yourself. When you win, ask yourself, am I being overconfident? And when you lose, ask yourself, am I really learning or just blaming myself? In trading, money comes only to those who learn to manage their emotions. Because real strategy is never just found in charts. It's found in the balance between your mind and heart. And when you learn to sail above this emotional tide, you become more of a warrior than a trader. But this is the battle against the most hidden enemy. An enemy that is invisible but erodes the trader from within. And that is random reinforcement, danger. Now you're probably wondering what this is. So, listen up. This is a psychological trap that most cleverly and silently kills your discipline. And the sad thing is, most traders don't even realize they're in its grip. Random reinforcement occurs when you trade incorrectly and make a profit without any clear reason. That is, you broke a rule, didn't follow a strategy, took an impulsive trade, and still made money. Now your brain records this signal. You see, rules aren't needed. Profits can be made this way. And this is where the journey of decline begins. Because a false belief begins to take root in your mind. You subconsciously start believing that the outcome is more important than the process. I've found myself falling into this trap many times. Once I took a trade without any setup, just based on gut feeling, and luckily it turned profitable. That day I thought, wow, my instinct is working. But the next 5 trades, that same instinct, I still can't forget where it led me. The biggest deception in trading is when you get a good reward for a wrong behavior, because now you repeat that behavior again and again, hoping for the same result. But the reality is that the market is random, and its reward system is never consistent unless you yourself are consistent. Random reinforcement is a silent addiction. It erodes discipline like erosion, a little bit each time. And the most dangerous thing is that you start justifying it. You say, I did the same thing last time. I made a profit. Maybe I will this time too. But in trading, that probably doesn't work. The only thing that matters here is a clear mindset, a repeatable process, and emotional neutrality. When I understood this pattern, I learned to control myself. I accepted that learning solely from results is dangerous. I had to look at how the result came, why it came, and whether I could repeat it. Random reinforcement within a process is an illusion that gradually takes you away from strategy and closer to chaos. And if you don't break this illusion, one day that illusion itself will destroy your confidence. So, a successful trader isn't one who makes a profit every time. A successful trader is one who follows the same process every time, regardless of the outcome. Because ultimately, the market controls the outcome. But the process is always in your control. But the question now is, do you truly understand that process? Or are you simply trading with some rules, some indicators, but without a clear mental framework? Many traders enter the market every day. They have strategies, tools, and capital, but they miss the one thing that defines everything: a strong mental framework. When I started trading, I had everything: candlestick patterns, breakout strategies, Fibonacci retracements, everything. But the one thing I lacked was mental clarity. My mind was always looking for something else in every trade. Sometimes excitement, sometimes redemption, sometimes thrill, sometimes escape. And when your mind isn't clear, every strategy becomes weak. Mental framework means a mindset that stabilizes in every situation. Someone who knows when to take a trade and when to leave it. Someone who can recognize emotions but doesn't react to them. When you don't have this framework, every win makes you uncontrollable, and every loss shatters you. You try something new every time. This strategy didn't work. Now I'll use that one. But you never think about whether your mindset is ready. Not having a framework means you react to the market every time, not respond. You jump at every signal. You see hope in every breakout and panic in every red candle. You're not process driven, you're emotionally driven. I've often found myself in a phase where every decision I made was driven by impulse. Just make a profit today, then take a break. But every time that break seemed to recede and frustration grew closer. Then one day I asked myself, am I a trader or just a confused person making decisions based on charts? And that's when my transformation began. I started organizing my mind. I created rules not just for strategy but also for thinking. I not only recorded entry and exit positions in my trading journal, but also tracked my emotional state. And gradually, a framework developed. My focus was no longer on results. My focus was on consistency. The market keeps changing, price action is unpredictable. But if your mindset is anchored, you can survive every storm. A mental framework is that anchor. It protects you from overconfidence, fear, and most importantly, self-doubt. So, if you're going to trade every day, be sure to ask yourself one question. Do I just have a strategy, or do I also have a mental foundation? Because trading without a framework is like sailing a boat without a rudder in a storm. You can drift far, but never reach the right direction. Friends, now that I look back on this entire journey, those bright dreams, the joy of those early profits, that blind overconfidence and the emotional losses that plunged me into the depths, I see only one thing clearly. Trading is a mirror, and that mirror shows every trader their own face first. As wonderful, glamorous, and free as this path may appear from the outside, it is equally deep, challenging, and unstable from within. Every trade is a test. Not just your technical knowledge, but also your patience, self-control, and self-awareness. Those who enter this world with dreams of easy money fail to understand this journey. They think strategy is everything, but trading never operates on strategy. It operates on mindset. Sometimes you win for no apparent reason, and you attribute it to your skill. Sometimes you do everything right, and still lose and start doubting yourself. This uncertainty, this randomness, can either break you or make you. If you trade without a mental framework, you are turning your life into an emotional casino. Trading becomes addictive when you make it a source of emotional highs. But trading becomes powerful when you do it with self-discipline, inner mastery, and a long-term vision. It takes courage to walk this path. The courage to accept your own truth. Because the market never becomes your friend or enemy. It simply reflects your psychology. And when you understand this, you trade to win, not to win. Thank you.